Achievers Lanka Business School was established in 2006, bringing together 5 leading lecturers in the SEMA industry with a vision of directly contributing to the corporate world by attracting high-caliber students and molding them to be outstanding professionals. Achievers and approved SEMA Learning Quality Partner, Achievers Lanka Business School was established in 2006 and provides facilities for classroom learning in the SEMA industry and with a vision of directly contributing to the corporate world by attracting Achievers is a leading institute and molding them to be outstanding professionals. We attract the bright Achievers and best and guide them to Achievers Lanka Business School. We are passionate about transforming lives and providing facilities for classroom learning. Achievers won Asia's Best Business Leadership Award with an annual intake of 6,000 by attracting Achievers is a leading and molding them to outstanding. We attract the bright Achievers and best Achievers and go beyond Achievers Lanka Business School. We are passionate about transforming lives and providing personality development. Achievers provide a platform for leadership award with annual intake of 6,000 by attracting Achievers as a well-award and molding them to corporate world. We attract the bright Achievers as Achievers go beyond Achievers Lanka Business School. We are passionate about transforming lives and providing personality development. Achievers provide a platform for leadership award with annual intake of 6,000 by attracting Achievers as a well-award and molding them to corporate world. They make all round Achievers as Achievers go beyond Achievers Lanka Business School. We are passionate about transforming and provide Achievers Achievers provide a platform for leadership award with 6,000 by attracting Achievers as a well-award and molding them to corporate world. They make all round Achievers as Achievers go beyond Achievers Lanka Business School. We are passionate about transforming and provide Achievers
Hi, I'm Teshani. I was Island first at the 2019 A-level exam from the Commerce stream. After my A-levels, I chose to study ACCA because it's respected globally and well recognized and sought after by many employers around the world. Also, the knowledge and skills provided by ACCA are very relevant and practical to today's ever-changing business world. I'm currently studying ACCA at Achievers, and something I realized while studying at Achievers is that the lecturers are fantastic and they genuinely care about their students and help them reach their potential. Also, the classrooms are very interactive and lecturers even take time to provide one-on-one support to their students. QBR sessions and the revision classes before exams are very effective and well tailored to bring out the best in you and also increase your confidence before your exam. At Achievers, you can also get a lot of flexible options like studying part-time, full-time, or even studying online, which I think is very convenient as a student. So I would like to recommend studying ACCA at Achievers to any student who aspire to become a professional accountant.
Achievers, where good becomes great.
Hi, I'm Yunus Nasrullah. I'm working at PwC as a senior associate. I started ACCA right after O-levels, and now I'm done with the ACCA qualification, the BSc degree in Applied Accounting, and also I have gained the membership from ACCA, all at the age of 20 years. I started my ACCA journey at Achievers by enrolling into the Protein program. Protein means professional teenagers. This program is specially designed for the students after O-levels. Here at Achievers, the lecturers are very friendly, and also not that, the content that they deliver is very easy to understand. And also at Achievers, it's not just about ACCA and the studies only. They have several other programs which molded me to what I am today. I'm glad that I chose Achievers right afterwards. I would recommend you Achievers if you want to complete your ACCA and the BSc degree in Applied Accounting in a short period of time and also with the best lecture panel that you would ever get.
Achievers. Well, good becomes great.
Hi, my name is Hashan Hettigara and I'm a past head prefect of Royal College, and I'm currently pursuing my undergraduate degree in mechanical engineering. Having been a prefect, it was hard to manage time to do anything else. But due to the fast track course offered by Achievers, I was able to complete my ACCA knowledge within just 3 months. And this enabled me to hopefully finish my ACCA qualification within just 1 year and 9 months. And this was not just because of the effort that I should put in, but this is due to the help and support given by the lecture panel, who maintain the highest pass rates and the highest number of world ranks within Sri Lanka. They offer one-to-one support or anything else that you require at any time. So if you are planning on joining ACCA or CIMA, I do recommend that you join Achievers.
Achievers. Well, good becomes great.
Hi, I'm Sarni Mudan Naik, a 19-year-old TV presenter, voice artist and an ACCA affiliate. I started off my ACCA right after O-levels at Achievers. Initially, I thought of ACCA as a very difficult qualification, but later realized that it is not. It is a globally recognized professional qualification that you could do right after O-levels, because I did it. I did not just participate in ACCA-related activities, but also did many other things. I was an in-tractor as well as a road tractor. I did my A-levels as well as started off my career as a media presenter. So you see, you just do not need to be focused in one area when you do ACCA. The best part about ACCA is the tuition provision. Achievers made ACCA very, very easy for me. They have a specific program called the Pro Teens Program, Professional Teenagers. Now this program helps us right after O-levels to understand the way of ACCA, eases us into a professional qualification. This helps us break our mindset from being normal teenagers who are just after O-levels to being teenagers who are very professional. And the best part about Achievers is that it's fun, the lecturers are awesome, and it's all in all friendly. If you are right after O-levels, confused about what you're supposed to do, I would recommend ACCA at Achievers.
Achievers. Well, good becomes great.
Hello everyone, I am Mathushika Murugeya, the Games Captain of Prefect Skill 1819 of Saivamangere Vidyalayam. As a pass-out of 2019 Advanced Level, I was looking for a qualified professional qualification with a global recognition. As a result, I chose CIMA at Achievers to kickstart my career path. The reason I chose Achievers is because of its qualified and highly experienced lecture panel. They are being most wonderful moral support from the beginning of our program. Apart from that, the support services offered in Achievers also remarkable. And when we consider about the classes, they conduct both physical and online classes. Their online classes have become more effective and user-friendly, especially to the students who are out of Colombo. And also, we can get the videos of the classes in case if we miss any classes. There are several opportunities we can build up with them. Therefore, I would like to tell that this place will definitely be a key to success. And also, I will highly recommend Achievers if you are expecting to start CIMA or ACCA.
Achievers. Well, good becomes great.
Hi, I'm Shana Gunawardana and I'm the head prefect of St. Joseph's College for the years 2019-2020. After completing my A-levels, I decided to join Achievers to follow up on CIMA, and I think that it was one of the best decisions I've ever made due to many reasons. They don't just teach you the syllabus content, but rather they train you and prepare you for final exams by implementing a series of mock exams. And also, despite of how many students there are in a class, they make sure that each student get personal attention and one-to-one support. Therefore, I urge you to join Achievers to complete in your CIMA qualifications.
Achievers. Well, good becomes great.
Hi, my name is Sitaraha Puhin. I was the head prefect at St. Thomas's College, Mount Lavinia. I chose ACCA because it's recognized worldwide and because it will help me to become a global professional. I selected Achievers mainly because they offer flexible study options and because they have a great lecture panel. They just don't only focus on studies. They have other various activities such as sports day to showcase your sporting talents and boardroom challenges to improve on your presentation skills. These things will ensure that you are corporate ready.
Achievers. Well, good becomes great.
I'm Hamshika Mohanadas, Head Prefect of Savamangir Vidyalayam, Prefects Guild 1819. I have chosen SEMA for my higher studies because it's globally well recognized professional qualification and it also supports my future career. I joined Achievers to follow SEMA because the classroom systems are good. They conduct both online and physical classes. If you are out of Colombo, you can join the online classes and trust me, you will get the experience as you are in a normal class because the online classes are much more effective now at Achievers. Therefore, join the best lecture panel for CIMA and ACCA and start the journey for a successful life.
Achievers. Well, good becomes great.
My name is Druinga Pereira and I'm currently serving duties as the Deputy Head Prefect of Sports at Royal College. So right after A-levels, I decided to study ACCA and I'm currently in the second stage now. Well, with my prefectship and work, of course, I couldn't attend classes properly, but however, I was able to study everything properly without any issue because at Achievers, there is a proper system to provide the recorded lessons to the students who miss classes. And also, even after watching the videos, if there are any issues, any doubts to be clarified, lecturers will always be there to give one-to-one support. And also, having the option of attending classes physically or online is something really great because I don't have to go to kids every day, and whereas there were some certain days where I used to study at home. So all in all, I'm really glad to have chosen Achievers to study ACCA.
Achievers. Well, good becomes great.
A very good morning to everyone. I'm responsible for hosting this webinar today, and it's a moment of extreme pleasure to welcome all of you to the second day of Ginum Karune Tirtha Yatrava Nanasa Accounting Webinar, organized by Achievers, the largest college in Sri Lanka for ACCA and CIMA. On behalf of the institution, I offer my regards to the principals of respective schools and the teachers for coordinating you to make this event a success. Also, I take this opportunity to convey my warm regards to Professor Harendra Karyavasam, Head of the Department, and Mr. Chaturanga Sadharwan, Senior Lecturer of the Department of Accounting, Faculty of Management Studies and Commerce, University of Sri Javadanapura. It is such an honor for us to have you both today with us, sirs. Thank you so much for joining and bestowing us with your presence. Also, I welcome all the students who are taking part on this event today. I think this is the best time to give you all a brief introduction on who we are and what we do. Achievers is the largest college in Sri Lanka for ACCA and CIMA. ACCA enables you to become a chartered certified accountant. By doing ACCA with achievers, you can get a BSc degree in applied accounting awarded by Oxford Brookes University by only doing the final project. This is a fantastic opportunity for you all to gain a professional qualification and an academic qualification at the same time. CIMA, as you all know, is a world-recognized professional qualification awarded by the Chartered Institute of Management Accountants. At Achievers, we go beyond providing a mere qualification for students. Our vision is to equip students with the necessary skills to excel the corporate world while attaining success at the exams. Achievers received the Best Business School Leadership Award at CMO Awards held in Singapore. Also, Slim Brand Excellence Award in 2012. My dear sons and daughters, you are the future of this nation. You have been working really hard for more than 2 years for the most important exam in your academic life. You have been preparing yourself with the support of your teachers and your parents during one of the most unpredictable pandemic this planet has ever witnessed. Considering all that, my dear sons and daughters, I name you as one of the strongest generation this country has ever produced. No matter what life throws at us, we still move forward. Understanding the requirements of our future generation, understanding the situation of this country, Achievers decided to come up with this valuable series of accounting webinars to guide you to achieve high marks in your G.C.E. advanced level examination. Today, we discuss the accounting paper, part 2 of the accounting paper, which includes 6 questions in total. But we have divided this question paper into 2 parts and will be discussed during 2 respective sessions. First 3 questions are already being sent to you in PDF format, so keep it downloaded. Then you can follow the same with the lecturer. This Zoom meeting can accommodate very limited number of participants, so I kindly request you all to be with us without leaving the meeting until both the sessions are completed. In case any of your colleagues are unable to join Zoom, you can inform them that we are live on our YouTube channel. So they can catch us on YouTube if in case they are unable to log into this Zoom meeting. Also, you can use the chat options on both YouTube and Zoom to ask questions which you think are really important for you all and for the other participants as well. Considering the time factor, important questions will be answered by lecturers during the sessions. I'm not willing to take more of your valuable time, and here we start the first sessions today. I'm glad to invite Senior Lecturer Mr. Chaturanga Sandurwan, Department of Accounting, University of Sri Javadanapura. Sir, you can continue from now.
Good morning, everyone. Hope I am audible to you properly. Am I audible? Hope that is okay. Right. So you have been doing your advanced level for about 3 years. Fortunately, the examination dates have been published by now. So, my dear students, you have about 1.5 months for the examination. By now, you should have completed the syllabus. And these days, you should do papers. Now, there is a target ahead. So you have to do the target, you have to achieve the goal at your level best. To help in that process, achievers and ourselves, we decided to help you by discussing a very valuable paper. So today, we are going to discuss the second paper of the accounting subject, and hope that you have got the paper and it is with you. So let's begin the first question. You know that the first question is a compulsory question which comes from the company accounting. It carries 40 marks. So you have to have at least 35 or 30 to 35 at least for the company accounting question. So let's see how to get 30 to 35 marks, as well as the strategies that you need to follow at the examination, particularly to manage your time. You know that advanced level accounting paper has two competitions. One competition is you have to compete with the knowledge, meaning you have to have the required knowledge. The second one is you have to complete the paper within 3 hours and 10 minutes. I am sure that you are aware that you get additional 10 minutes to read the paper. So altogether you can get 3 hours and 10 minutes. So within 3 hours and 10 minutes, you have to complete the paper. So if you win both these competitions, knowledge competition and the time competition, then only you will be success. So let's see during this seminar how to fill the gaps in the knowledge, as well as how to manage your time at the examination. So let me share the question for a while. And if you have questions, you know my name, I am Chaturanga Sandaruwan. So I am log into the system in my name. So if you have any question, please chat to me, Chaturanga Sandaruwan. You can find it from the participants list and send me the messages. And if time permits, we will discuss more questions at last. Well, so we come to the first question. The trial balance prepared by Anuradha PLC on 31st March 2021 is as follows. And we have been given the property, plant and equipment, lands and buildings, machinery, motor vehicles. But we don't see the accumulated depreciations, meaning, so these assets are given at their carrying amounts. These assets are given at their carrying amounts because we are not given the accumulated depreciation. Got it? And then lease liability, inventory, sales, service revenue. Look at that, service revenue. So when you compare the value of that, it is a considerable amount compared to the sales revenue. Sales revenue is 4,820, and the service revenue is 1/4 of that, about 1/4. So it is a considerable amount. And cost of sales, trade receivables, cash, trade payables, other payables, distribution cost, administrative expenses, financial cost, other expenses, long-term debts, ordinary share capital, dividends, retained earnings as at 1st April 2020. And after that, we are given the adjustments to do. So the first adjustment, and likewise we have been given how many adjustments? 15 adjustments. But don't worry about the number, because the most difficult adjustments come from the property, plant and equipment. They are the most difficult adjustments. And if you do these adjustments, the rest of the adjustments are easy. Therefore, don't judge the question by looking at the number of adjustments. Okay. And also, you need to complete this question, whether you like it or not, within 36 minutes. 36 minutes. Hope that you don't have like heart diseases and all, right? So anyway, you have to complete the company accounting question within 36 minutes. So the requirements, let's get into the requirements. The first requirements is the statement of profit or loss and other comprehensive income for the year ended 31st March 2021. The statement of financial position as at 31st March 2021. The statement of changes in equity for the period and notes for the period. So you need to prepare these formats as quickly as possible. Maximum time that you can get to prepare these formats, maybe 4 to 5 minutes. Within 4 to 5 minutes, you have to prepare these formats. So, my dear students, now this is an online seminar. You know that this is not like a physical class, physical face-to-face class. Therefore, in order to have this seminar in an effective way, you also need to engage yourself in an active way. So please do these questions with me. Don't just listen, do the questions with me. Then you will be engaging with the seminar effectively, actively. Then the seminar will be fruitful. And if you think that this is not effective or this is not good, we don't get anything new, so please let me know. I can at any time finish the seminar. Okay, so let's get it. The first one is the statement of profit or loss and other comprehensive income. Please remember to write the company's name and the statement's name and the period's name, right? So the company's name is Anuradha PLC. Anuradha PLC. The statement of profit or loss and other comprehensive income. You can write abbreviations like this because we are competing with the time as well. Therefore, you can write abbreviations: profit or loss and other comprehensive income. For the year ended 31st March 2021, and also remember to write the currency and the level of rounding up, right? Therefore, rupees 1000, because this is a requirement as per LKS 1. Therefore, it will take like half of a second. Therefore, need to write the currency and level of rounding. And we saw when we were reading the question, the sales revenue and service revenue. So revenue has two parts, sale of goods and providing services. Therefore, the first item is revenue. Revenue. And then minus cost of sales. Then we get gross profit, GP, and plus other income. Other income. Minus expenses. First one is distribution cost. And second one is administration expenses, admin expenses, then other expenses, then finance cost. Then we get profit before tax. And from that we deduct income tax. And then we get profit for the year. Profit for the year. And then we need to adjust other comprehensive income. Then lastly we get total comprehensive income. And next one, I take the statement of changes in equity. Statement of changes in equity. So we need like stated capital, revaluation reserve, and retained earnings, and keep another row as well, another column as well. Let's say share capital, revaluation reserve, retained earnings. And to manage the space in this board, because I can take many pages, but it will be difficult to navigate. Therefore, to manage the space in this board, I am taking few notes here. Few notes. The first note goes to the revenue, number one, because it has two components: sale of goods and providing of services. Got it? Therefore, I put the note number one to the revenue. And then usually we put another note for other income, note number 2, and profit before tax, note number 3, income tax, note number 4. So those are the notes required for the income statement. Got it? So the first one is revenue. So keep like 3 rows. Then second one, other income. And third one, profit before tax has been calculated after deducting following expenses. And note number 4 goes to the income tax. Okay. So we have prepared the formats for the income statement and changes in equity statement and the notes required for the income statement. Then the statement of financial position. So I go to another page. Statement of financial position as at 31st March 2021. And remember to write the company's name as well. Anuradha PLC, quickly, Anuradha PLC, statement of financial position as at 31st March 2021. Right. Note column. Then on top, we got to write non-current asset, under that property, plant and equipment, and then right of use asset. Right of used asset. And then current asset. Under that, inventories, trade receivables, other receivables, and keep 1 2 rows, and then cash and cash equivalents. Cash and cash equivalents. Then we get total asset. And then equity. You know, in a company, equity consists of two parts: stated capital and reserves, right? So share capital and then reserves. Under that, revaluation reserve, and retained earnings. Then non-current liabilities. Lastly, current liabilities. Under that, trade payables, other payables. Trade payables and other payables. And notes for the SOFP. You know that we wrote the note number 4 lastly, note number 4 for income tax, and then note number 5. Note number 5 goes to PPE, note number 6 goes to right of use asset, and note number 7 goes to other receivables, note number 8 goes to other payables. Right? Then I will prepare the note number 5 here. Note number 5, that's property, plant, and equipment. So we have the categories of assets: lands, buildings, machinery, motor vehicles. All together 4 categories. First one, second one, third one, fourth one. We have lands, then buildings, then machinery, then motor vehicles. The beginning balance as at 1st April 2020, additions, disposals, revaluations. Then we get balance as at 31st March 2021. And then accumulated depreciation. Balance as at 1st April 2020. Depreciation for the year, removals, and then balance as at 31st March 2021. And lastly, the carry-in amount. Carry-in amount as at 31st March 2021. I'm sure that you are familiar with these formats because we are at the 11th hour. So hope that you know how to prepare these formats. And then right of use asset. Note number 6. Right of use assets. If you look at this leasing transaction, the leased asset has been purchased during the current year. Therefore, we don't have previous balances. In a case like that, you don't have to have a comprehensive schedule as PPE, but you can have cost and accumulated depreciation because we are competing with the time, right? So I take cost minus accumulated depreciation. But remember, if you have previous balances, meaning that you acquired the lease asset in the previous year or year before the current year, then you have beginning balances. Beginning balance for the cost and beginning balance for the accumulated depreciation. In a case like that, you have to have this schedule like this. Okay, beginning balance, then maybe additions, disposals, at least beginning balance, accumulated depreciation beginning balance, and depreciation for the period. and then closing balance carrying amount. Got it? Right. But here in this question, the leased asset has been purchased during the current year, therefore we don't have beginning balances. Right? Then number 7, other receivables, keep 2-3 rows, and 8 other payables. And after the last note, keep some more space because you may have to disclose some information, disclosure notes, right? So keep some more space, like 4 to 5 rows, disclosure notes, right? So after that, we want the workings. The main working is expenditure table, isn't it? Main working is expenditure table. So it has to have 4 columns: distribution cost, admin expenses, other expenses, and finance cost. Now we are ready for the question. So this format should be completed within maximally 4 to 5 minutes. Otherwise, you will not be competing with the time. So I will give another 1 minute to complete the format, entire format. You know the format. Therefore, please complete the format as early as possible. And meantime, I will look at some questions. Yes, there are a few questions. Yes, why not? Whatever I tell here is 100% reliable. So for example, if I say to write the abbreviation for the income statement, that is okay because everyone knows that you are competing with the time, right? So everyone knows that you have the understanding, profit or loss and other comprehensive income, right? So you know that to write the entire or the full name, it will take some time, right? So therefore, whatever I tell in this seminar is 100% valid and reliable. No, your paper structure will not be changed because the paper will be tested for all the topics because you have spent like three years. That 3 years means very considerable time, right? So you have to be ready for the entire paper. Okay, so I have got many questions, but time doesn't permit me to address all these questions. Yes, here the reason for the note number 1 for revenue has 2 parts: sale of goods and service revenue, right? Therefore, you need to have a note for that. You know that SLFR is 15, revenue with contract with customers, accounting standard, has been tested at the examination in the last year, and it is actually a new standard to your level, A level. Therefore, if you have the service revenue component, if it is a significant component of the revenue, you have to take a note. Okay, you have to take a note. Right, anyway, let's get into the first adjustment. Now, I am not answering all the questions, right? So what you can do is you can follow me. By following me, you can understand, you can identify the reasons for your questions. Because if I answer for all questions, I won't be able to do the seminar. Okay. Therefore, for the benefit of majority, I am doing the paper, and while I am doing the paper, please observe me and please look at the clarifications and observations, and then you will get your questions resolved at the end. Okay, so we come to the first adjustment. First adjustment. Look at this. Sorry. The company uses the batch method to determine the net realizable value of inventories. You know that to determine the net realizable value of inventories, you can use either item method or batch method as per LKS 2. But this company uses the batch method, right? Hope that you remember the batch method. The following stock items are remaining as at 31st March 2021 under the following categories. Category A and category B. Okay. And remember, the priority should be given to the item method, but if not, you have to go for the batch method. That is as per the LKS 2. I'm not going to teach you the theory here because by now you should have the theoretical knowledge, but I am doing these questions. Okay, by doing these questions, I might not be able to emphasize the theoretical aspect because of the time limitation, but later you can look at the theoretical aspect if you want, and if you think that you have a gap in that area. Right, so we have been given two categories, category A and category B. So in batch method, what happens? You take the category as a whole, So you take the cost of this category and cost of category B, and in net realizable value or NRV of category A, NRV of category B. So let me write it here. Right. So first adjustment, category A, you take the cost and NRV, net realizable value. Right. So the total of the cost, and if I am wrong, please let me know and please correct me. The cost of the category A is 560 plus 450 plus 610. So it is 1620. And NRV, net realizable value of category A, 700, 600 and 200. It is 1500. And similarly, for category B, we can take the cost. There are three items, 250, 280 and 150. It's 680. And it's NRV 170, 450, 140. It's 760. And what we did is we took the category as a whole, right? So we select the lowest value, lower. From the category A, the lowest one is 1500. And from the category B, lowest one is 680. Therefore, the NRV of the entire stock is 2120. 2120. But if you look at the cost of the stock, cost is 1620 plus 680, it's 2300. And if you just look at the inventories as per the trial balance, it is also 2300. If you look at the trial balance, you can see the inventory is stated at its cost of 2300. So its net realizable value is lower than the cost. So we have to write off, isn't it? Write off how much? The difference between these two is 180. 180. Okay, 180. So hope my calculations are correct. If not, please correct me. And don't ask unnecessary questions, because if I answer for all these questions, I can't complete the questions within the time. Therefore, please do the questions with me, and your questions will be resolved at the end. Wait till that point, and if not, ask questions at last. Okay, right. So 180 stock write-off. So it is an other expense. Stock write-off. Stock write-off 180. Right? And the lowest value is 2120. That goes to the inventories in the SOFP under current asset. So under current asset, inventory is stated at 2120. 2120 here. 2120. So the first adjustment is completely done. First adjustment is completely done. Then we go to the second one. And my dear students, now this is, you know, an online seminar, and you have the paper with you now. So what you can do is you can focus on the explanation and try to learn these adjustments. And later you can do the paper once again on your own. Okay, then you will understand the questions and other things. Is it 2000? Wait. Is it right? Yes. Here, calculation error. 2180, isn't it? Sorry. 2180. Yes. Sorry for that. 2180. Therefore, the write-off is 120, isn't it? 120. I wanted to check whether you are checking my calculations. So you are good. So please correct it. NRV is 2180. Therefore, the stock write-off is 120. That goes to the other expenses. And in the SOFP, this should be 2180, isn't it? 2180. Okay. Thank you for the comment and the message. And we go for the next one. Right. The next adjustment. The accumulated depreciation as at 31st March 2020. Look at the date. As at 31st March 2020. That is the ending date of the previous year. Ending date of the previous year. Look at that. Ending date of the previous year was as follows. The depreciations for the year ending 31st March 2021, that is the current year, have not been accounted. Meaning current year depreciations have not been accounted for. So the beginning balances of the accumulated depreciation are given below. Don't annotate on my screen. Okay, wait for a while. Right. Now you can write whatever you think. Right. So if you want to annotate whatever you want, because I have disabled it. Right. So these are the beginning balances of accumulated depreciation. Buildings 1,800, machinery 1,100, motor vehicles 1,500. So shall we take these balances to the PPE note? The balance as at 1st April 2020 of accumulated depreciation. Lands are not depreciated. Buildings 1,800, machinery 1,100, Motor vehicles 1500. So I have taken the beginning balances of accumulated depreciations to the PPE note. Third adjustment. Right. The company has leased a lorry on 1st April 2020. That is the beginning date of the current year. And paid 900 as the initial payment and 60 as professional fees on that day. And these payments are added to the motor vehicle account. Look at that. Now they have paid 900 as the initial payment and 60 as the professional fees with respect to the lease asset. So these payments are included in the motor vehicle. So that is completely wrong. That should go to the cost of the right of use asset. Right? Cost of the right of use asset. Now here cost. So we will write the breakup. The initial payment 900 and professional fees 60, and don't add these two figures because another part will come. So for time being, 900 initial payment and 60 initial direct expenses, in this case professional fees 60. Okay, professional fees 60. Now these payments are included in the motor vehicles. So that is completely wrong. So we have to remove it. Right? So let's go to the PPE note. And look at the values given in the trial balance. Right? So motor vehicles, look at this. Motor vehicles are given at 4,560. And this is the carrying amount of the asset. Because in the trial balance, we are not given the accumulated depreciation. Therefore, this is the carrying amount. And from the carrying amount, how do we find the cost? And carrying amount is derived after subtracting the accumulated depreciation. Therefore, if you add back the accumulated depreciation, you can find the cost. Okay, this is carrying amount, right? Carrying amount. And carrying amount is derived after deducting the accumulated depreciation. So you have to add back the accumulated depreciation, right? Accumulated depreciation. Then you get what? The cost. It's 6,060, right? 6,060. But still we can't get this figure as the cost because this includes 900 initial payment and 60 initial direct cost with respect to the leased asset. So we have to remove those two payments. Therefore, minus 960. Then you get the cost of the motor vehicle. If I am wrong, I mean in calculation, if I am wrong, please correct me. Right? 4,560 plus 1,500 minus 900 minus 60, it's 5,100. 5,100. That is the cost of motor vehicles. Paper has been already shared. I think organizers are there from the other end, so they will share it once again. Right? Is the cost incorrect? Carrying amount is 4,560. We have to add 1,500 motor vehicles accumulated depreciation. Okay. Then it is 6,060 minus 900 minus 60. It's 5,100. Is that correct? Yeah, it's correct. It's correct. Yeah. Okay. Okay, now we found the cost of the motor vehicle. So it is very good adjustment, right? So remember these kind of adjustments will be tested at the examination, right? So this is a very good adjustment. Now we will go to the third adjustment once again. Third adjustment. Now we corrected the error, right? We corrected the error. Now it further says the first installment. No, here the lease period is 4 years and the interest rate is 10%. Annual lease installment of 600 should be paid at the end of each year starting from 31st March 2021. Annual installment of 600. The first installment is duly paid and debited to the lease liability account. It is correct. When you pay the lease installment, cash account credit, lease liability debit. So that is correct. But if you look at the lease liability account, if I go up, look at this. Lease liability account has 600 debit balance, meaning that they have recorded only the installment payment. Cash credit, lease liability debit. So that's why in the lease liability account, we can see 600 debit. Okay, 600 debit. Okay, so that's what they have done. The present value of the lease payments as at 1st April 2020 at the commencement of the lease is 1,900. Lease interest for the last years on 31st March 2021 and on 31st March 2022 is 190 and 149 respectively, right? And you may cut this this word last years ended, right? There is a mistake. Years ended 31st March 2021 and 31st March 2022 are 190 and 149 respectively. The useful life of this lorry is 10 years. Now remember, lease period is 4 years, but the useful life of this lorry is 10 years. And it has no residual value. According to the lease agreement, the company has to return the vehicle to the leasing company at the end of the lease. Look at that. That is very important. Company has to return the vehicle to the leasing company at the end of the lease period. At the end of the lease period. Right? Okay. So how do we do this adjustment? So I am preparing. Shall I erase this? I am preparing the lease liability account. Lease liability account. Now currently it has 600 balance. That is the cash payment of the first installment. That is correct. No wrong with that. Got it? And we have to record the present value of the lease payments. Present value of the lease payments at the commencement of the lease. That is given as 1,900. So how to record it? It is a liability on 1st April 2020, 1,900 right of use asset debit. Lease liability credit 1,900, right of use asset debit 1,900. So again, I come to the note number 6, right of use asset. Under that cost, we have to add 1,900, the present value of lease payment. Now the cost of the item is how much? Cost of the item is 2,860. Am I correct? 960, 1,900. Yeah, 2,860. That is the cost. That is the cost. Okay, that is the cost. Right. Then the lease installment has been properly paid and accounted. No wrong with that. The first year interest for the year ended 31st March 2021 is given in the question as 190. So lease liability credit 190 under finance cost lease interest 190. Right? Even this figure is not given, you could calculate it. How? The value of the lease liability at the beginning of the period is 1,900 on that 10% lease interest rate. 1,900 into 10%, it is 190. So you could calculate it by using the lease interest rate. Okay, so we can balance this account. The credit side is 2090, and again I am emphasizing you, I am telling you, if I am wrong with the calculations, please correct me then and there, right? 2090 minus 600, 1490. Carried down balance, brought forward balance. 1490, and we have to divide this into current liabilities and non-current liabilities. Current liabilities and non-current liabilities, right? So what is current? The current is the capital component, the principal component of the next year installment. Next year installment is 600 because equal installments. Earlier 600, this also 600. And the second installment consists the interest of 149, right? So you can calculate that using the lease interest rate. The beginning balance is 1,490, on that 10% 149, right? Therefore, what is current? I told you the capital component. So it is 51 for 451. The balancing figure, that is 1,490 minus 451, is the non-current liability. It's 9301. Am I correct? I'm not that sure about my calculations. 600 minus 149, yes, and 1,490 minus 451, yes. So take these figures, 451 and 1,039 to the SOFP, right? Under non-current liability, lease creditor or lease liability, 1,039. Under current liabilities, I don't have space, so shall I write it here? Shall I write it here? The continuation of the current liabilities, right? Current liabilities, under that lease liability, $451. Got it? Okay. Now we have done the leasing adjustment, but we need to depreciate the right of use asset. We need to depreciate the right of use asset. Now, if you can remember, there was a sentence that at the end of the lease period, the vehicle should be returned back to the leasing company by the company. Okay. Therefore, if the ownership is transferred to the lessor or the leasing company at the end of the lease, in other words, if the lessee, meaning Anuradha company, doesn't get the ownership at the end of the lease term, the asset should be depreciated by taking the lower of lease period and the useful life. Lower of lease period and useful life. Here the useful life is 10 years, but the lease term is just 4 years. So the lower is 4. Therefore, we have to depreciate the right of use asset over 4 years. And if you don't understand these, right, this is not the time to teach these things, because by now you should have completed your syllabuses and you are ready for the examinations. Therefore, if you don't understand this, please go back to the notes, theoretical aspect, and study and get the knowledge. Okay, right. So we will depreciate it quickly. Cost is 2,860 and no residual value, and divided by lease term 4 years. Lease term 4 years. 2,860 divided by 4, it's 750. 750, right? So no accumulated depreciation beginning balance. Current year depreciation is 715. So this is what? This is a motor vehicle, lorry. So this depreciation goes to the distribution cost. Right of use motor vehicle depreciation 750. Right of use motor vehicle depreciation 750, right? And then we can actually calculate the carrying amount as well, because cost is 2,860 minus 715 accumulated depreciation. Therefore, carrying amount is 2,145. 2,145, right? So we have done the adjustment. Then we go to the next one. Right. Fourth adjustment. On 31st December 2020, a machine costing 100,000 was discontinued. Discontinued, meaning there is no use after that. Discontinued, as it could no longer be used. Rupees 20 was incurred to dispose this machine, and it is included in other expenses. This machine had been purchased on 30th June 2015. No adjustments were made regarding the disposal of the machine. So it is a disposal. Now, as per the accounting standard of LK 16, it is called as derecognition of asset. Derecognition of asset. Disposal, derecognition, disposal, all are same, right? So we come to the adjustment. Right. Now, we will prepare a disposal account. Disposal account. Disposal account. Disposal account. The first step of a disposal is to remove the cost of the item being disposed. Now, the cost of the machine being disposed is 100. So we have to remove the cost. How? Disposal account debit, machine account credit. Disposal account debit, machine account debit. Sorry, machine account credit. That means a removal 100. Removal 100, right? And also we will write the cost of the machines. Cost of the machines as earlier. Cost of the machine as earlier. Now, in the trial balance, we are given the machinery at the carrying amount. Machinery at the carrying amount, that is 3,000, right? 3,000, and this is the carrying amount. And if we add the accumulated depreciation 1,100, the cost is 4,100. Cost is 4,100, right? Now we removed 100 because it is disposed now. Machinery account credit 100, disposal account debit 100. The second step of a disposal is to remove the accumulated depreciation at the date of disposal, right? So we had purchased this asset. We had purchased this asset on 30th June 2015, and we sell this asset on 31st December 2020. How many years? Here 0, here 6, 5 and 6 months. 5 and 6 months. 5 years and 6 months. 5.5 years. So we can calculate the accumulated depreciation. Cost is 100, and we are given the depreciation rates in the adjustment number 7. Machines are depreciated at 10% annually. That into 5.5. 5.5 means 5 years and 6 months, right? So how much? It's 55. So we have to remove the accumulated depreciation, right? 55 from the accumulated depreciation, remove 55, and then disposal account credit 55. Accumulated depreciation, right? So accumulated depreciation account debit on one hand, disposal account credit 55 on the other hand, right? And then there is no sales proceed for this, because we can't sell this machine because it is discontinued. But in order to dispose it, we have spent 20. So that is a related expense for this disposal, but it is included in the other expenses. So remove 20 from here, right? Disposal cost. That is included in the other expenses. So remove it. Right? Other expenses credit, disposal account debit. This is cash. We don't have a sales proceed. Instead, we have incurred an expense to dispose this, like to remove the salvages, scraps. We have spent 20. So that is included in the other expenses. We removed it, other expenses credit, disposal account debit. Now we can balance this. 120 debit side, 120 minus 55, how much? 5, 6, PNL or income statement. Am I correct? 120 minus 55, yes. I'm very bad at calculations now because of the tank into these calculators and computers. Early days, okay, but now I'm very bad. Okay, 65. So that is an expense, right? Under other expenses, disposal loss 65. Disposal loss 65. No, this is not the sales proceed, right? This 20 is the expenditure that you incurred to dispose this asset. Okay, this is not the sales proceed that you get by selling this asset. No, that is not the selling price. That is the expenditure that you incurred to sell this asset. Therefore, cash credit, this account debit. So that comes to the debit side. That is correct. Got it? Right. So it is done. What next? Actually, we could depreciate the motor vehicles and machinery at the same time, because no other adjustments related to the motor vehicles and machines. So we can depreciate. Shall we depreciate? Shall we depreciate those two assets? If I take this one first. Now, if I write a timeline here, the financial year starts on 1st April 2020, ends on 31st March 2021. That is our financial year, right? That is our financial year. And at the beginning of the period, we have had 4,100 machinery. Look at here, 4,100 machinery, right? So at the beginning date, 4,100. And on 31st December 2020, we have sold 100. We have sold 100. So how to calculate the depreciation for the year for machinery? Now 4,100 was there at the beginning, but of that 100 was disposed. Therefore 4,000 was there for the entire period. Therefore 4,000 into 100, so 10%, it is 400. Understood? 4,100 was there at the beginning, but of that 100 was sold, right? 100 was sold. Therefore 4,000 was there for the entire period. Therefore 4,000 into 10%, 400. And this 100 was there for 9 months. 9 months. Right? From 1st April 2020 to 31st December 2020, 9 months. Therefore, 100 into 10% into 12 upon 9, we get how much? 7.5. 7.5. Yes. Therefore, total depreciation is 407.5. 407.5. Yes. Thank you. And under distribution, not distribution, because this is machinery, isn't it? Under administration expenses, machine depreciation, 407.5. 407.5. And include that into the accumulated depreciation for machinery, 407.5. 407.5. That is done. And shall we depreciate the motor vehicles as well? Because no other adjustments. The cost is 5,100. If you look at the 7th adjustment, you can see the depreciation rate for motor vehicles 20%. So 5,100 into 20%, easily you can get the figure. Is it 1,020? 1,020? Hope you are doing the question with me, right? 5,100 into 20%, 1,020, right? So include that into the accumulated depreciation. On the other hand, under distribution cost, motor vehicle depreciation, 1,020, right? So we have done the motor vehicles, machinery, leased vehicle, all are done, right? So we go to the next adjustment. Fifth one. On 1st April 2020, the company revalued the lands for the first time, and the buildings for the second time. The fair values of these assets were decided on that day as follows. Land 4,500, buildings 3,500. And in addition to that, there is a sentence which says the cost of the land was 3,000. Cost of the land is 3,000. Right. And actually this is the same adjustment, right? Same adjustment. On 1st April 2020, the remaining useful life of the buildings were estimated to be 15 years and the residual value was 500. During the first revaluation conducted on 1st April 2018 for buildings, there was a deficit of 250. No adjustments have been made in the books of accounts with respect to the revaluation conducted on 1st April 2020. Right. So lands are revalued at the first time, buildings at the second time, right? So let's go to the PPE note. The cost of the land is how much? Cost of the land is 3,000. Cost of the land is 3,000. If so, we can find the value of the building. How? And if you look at the trial balance, the lands and buildings are given as a combined figure at 4,000. Right? Shall I erase this part? Right. Now, the both of these assets carrying amount is as per the TB 4,000. As per the TB 4,000. Of that, cost of the land is now 3,000. Therefore, if we subtract 3,000, 1,000 is what? 1,000 is carrying amount of buildings. Carrying amount of building. Got it? Carrying amount of building. And we know the accumulated depreciation 1,800. So if we add accumulated depreciation to the carrying amount, that is 1,800, then we get 2,800 the cost, not the cost, the previous valuation, 2,800. So that is a very good adjustment. Okay, very good adjustment. Right, now we can do the revaluation because that has not been done. Now we'll take the lands first. The lands fair value is 4,500. It is revalued at the first time, right? Therefore, revaluation surplus 1,500. If so, we get the revalued amount for 4,500. And this should be recognized where? This 1,500 should be recognized in the OCI. Under OCI, land revaluation surplus 1,500. Land revaluation surplus 1,500. Got it? That is very simple. And the buildings. Now, building is a depreciable asset. So we have to remove the accumulated depreciation at the date of revaluation. So remove 1,800. I hope that you all understand this because you have the previous knowledge. This is the last couple of months for the examination, right? Therefore, I think that you have the required knowledge. So we remove the accumulated depreciation at the date of revaluation. And the fair value of buildings at the date of revaluation is 3,500. 3,500. Now to make this amount as 3,500, we have to add 700. 700. But this 700 is not the revaluation surplus or deficit. This 700 is not the revaluation surplus or deficit, right? So let's calculate it. Let's calculate it. Shall I erase this? Okay. So fair value of buildings. Now this is buildings. Fair value is 3,500. Fair value is 3,500. And you know that fair value minus carrying amount. Fair value minus carrying amount is the revaluation surplus or deficit. Right? Carrying amount is how much? The cost of the lands. Cost of the lands 2,800. Accumulated depreciation 1,800. 2,800 minus 1,800. So the carrying amount is 1,000. 1,000. Right? 1,000. Therefore, its fair value is greater than the carrying amount by 2,500. So it is a surplus. Surplus. But we have a previous deficit previous deficit of how much? As per the question, previous deficit of buildings, how much? 250. 250. Now the previous deficit has been recognized in the other expenses in that year. So we have to reverse it. So it is a reduction of deficit. Reverse of deficit. 250. Reverse of deficit. Reversal. It is a reversal. And if we reverse the 250 deficit, still we have a surplus of 2,250. That goes to the OCI. That goes to the OCI. So under OCI, write buildings and include the figure 2,250. Right? 2,250. Buildings surplus 2,250. That's all. 2,250. And lastly, we can depreciate the buildings. It's very simple because we are given the remaining useful life as well as the residual value. So let's depreciate the building. Let's depreciate the building. The fair value is 3,500 and the residual value at the date of revaluation is 500. Therefore, depreciable value is 3,000 divided by remaining useful life 15 years. 3,000 divided by 15 years, 200. Am I correct? 200. Am I correct? 3,500 fair value minus residual value 500 divided by remaining useful life 15 years. Yes. Yes. So under admin expenses, building depreciation 200 and accumulated depreciation 200 comes here. 200 comes here. So we have done most of the adjustments, most of the difficult adjustments. Right. So let's get into the eighth adjustment. Right. Next one. Look at this. Accrued audit fee of 150, which included in other payables as at 31st March 2020, that is last year ending date, has been duly paid in the current year, but it has been recorded in the administrative expenses. Audit fee of 170 for the year ending 31st March 2021, that is the current year expenditure, has not been paid or accounted for as at 31st March 2021. So what has happened? What has happened? Previous year audit fee is included in other payables. When we pay the previous dues, cash credit, payable account debit. It should be cash credit, payables account debit. But what has happened? Cash credit, administrative expenses debit. Administrative expenses debit. So that is correct. Sorry, that is incorrect. That is wrong. Right? So when we pay the previous payables, previous dues, the payable account debit, not the expense account debit. Therefore, remove 150, isn't it? Yeah. 150 from the administrative expenses. This is audit fee last year, isn't it? 1920. And when we pay the previous due, it should be debited or it should be subtracted from the payables. Therefore, we will come to the other payables. other payables, and as per the TB, as per the trial balance, other payables is 460. Other payables 460 minus 150. This is audit fees 1920. When we pay the previous due, payables account debit, so it is a deduction. Okay, and current year expenditure is 170. It has not been paid or accounted, so other way around, and it should be added here. Audit fees 2021 170, and it is an expense 170. Audit fees 2021. Very simple. 2021. Next one. Next adjustment. Ninth one. In April 2020, the first month of the current financial year, isn't it? In April 2020, the company announced that it would pay end of year bonuses to employees based on the business performance in the current year. So it is a current statement. It is made in the current year, saying that the company will pay bonuses to employees at the end of the year based on the performance of the company. The bonus of 820 for the year ending 31st March 2021 has been paid on 11th May 2021. That has been paid after the year, 11th May 2021. And no adjustment has been made with this respect to this bonus in the current year. So what is the treatment? Now this is a provision. Why? During the current year, in April 2020, the company has made the statement that the company would pay year-end bonuses to the employees based on the performance. So it is a constructive obligation. Constructive obligation. So that happened during the current year, but it has been paid after the current year, right? So the constructive obligation happened in the current year. We know the value, so we have to make a provision. How much? 820. So admin expenses 820. Bonus 820. Under administration expenses, write down 820 bonus. 820 bonus. Now, by the end of the year, that is 31st March 2021, it has not been paid because it is paid subsequently on 11th May. So by the end of the year, it is payable. But you can't include that in the other payables because as per the standard, the provisions should be separately shown on the face of the SOP. Therefore, under current liabilities, provision for bonus 820. Provision for bonus 820. Got it? Right. Then we go to the 10th one. Company pays income tax on a quarterly basis, and 382 of income tax paid for the first 3 quarters of the year ending 31st March 2021. The first 3 quarters expenditure is therefore 382. And this is included in the administrative expenses. The payment for the first 3 quarters are included in the administrative expenses. The income tax for the last quarter ended on 31st March 2021 is estimated at 135 and has been paid on 20th April 2021. No other records regarding the income tax have been made in the year 2020-21. So that is very simple. And if you look at the trial balance, we don't have previous provisions for the previous years with respect to income tax. So current year, first 3 quarters, they have paid 382. It has been included in the other. It has been included in the administration expenses. So remove 382 here. Tax paid. Tax paid. Remove the tax payment of 382 relating to the first 3 quarters from the administration expenses. Okay, and it should be taken to the income tax note. Right? So year 2020-21 we have paid 382. It's not an administrative expense, it's a separate expense, income tax. And this is for the first 3 quarters. The last quarter expenditure is 135. Right? This is for the first 3 quarters. Another quarter is there, 135. Therefore, total expenditure, total tax expense is 715. Isn't it? Am I correct? 382 plus 135, yes, 570. And this has been paid somewhere in April. Therefore, by the end of the current year, it has not been paid. So it is tax payable. So we come to the current liabilities. Again, I don't have space. Shall I erase this note number 5 as well? Tax payable. 135. Tax payable 135. Tax payable 135. That is also done. What next? Right. 11th one. An advance of 300 has been received on 20th April 2021, equivalent to the 60% of the total value of the transaction to provide the service in March 2021. Look at that transaction or the adjustment carefully. An advance of 300 has been received on 20th February 2021, equivalent to the 60% of the total consideration, total value of a transaction to provide the service in March 2021. The company completed the agreed service in March 2021. Company has fulfilled the performance obligation, completed the task. No other entries have been made or have been kept in this regard during the current year except for identification of the total advance in other payables. Total advance in the other payable. Right. So we come to the adjustment. Now look at this. Now we have received an advance in February of 300, which is equal to the 60% of the total consideration. But in March, we have completed it. Completed. Right? So taking these two figures, this is mathematical. You know that to have a very good result for accounting subject, you need to have mathematical knowledge as well, creativity as well, analytical knowledge as well, all required, right, to get a very good pass, very good rank in your district as well as in the island. So this is mathematical. Now 300 is equivalent to 60%. If so, we can find the total consideration, isn't it? Total consideration of the transaction. Total consideration. How 300 is equivalent to 60? If so, how much is the 100? 300 is equivalent to 60. If so, how much is the 100? 300 divided by 60 into 100, it is 500. 500. Now we have to recognize total service revenue of 500 with respect to this transaction. But what has happened? They have recognized this 300 in the other payables. That's only. This 300 in the other payables. That's only. That's that they have done. Right? That's what they have done. Now we have to recognize 500 service revenue. If you look at the trial balance, in the trial balance there is a service revenue of 1,200, right? So I come to the first note, revenue. Under that, keep one row to write the sale of goods. Sale of goods, and then service revenue. Service revenue. Now, as per the trial balance 1,200, and we now recognize 500. Therefore, total revenue is 1,700. 1,700. Got it? 1,700. Now, of this 500, still the advance is included in the other payables. Right? So we have to set off it because we have fulfilled it. It is no longer a liability. It is no longer a liability, isn't it? Right? Therefore, remove 300 from the other payables. What is this? Advance. And this is no longer a liability because we have fulfilled the obligation. Therefore, liability debit, income credit, service income credit. And we have received only 300, another 200 receivable, isn't it? Receivable. Another 200 receivable, because we received 300 in advance, another 200 receivable. So it should be included in the trade receivables. Trade receivables. So we come to the SOFP, trade receivables as per the TB. Trade receivables as per the TB, it's 810. I add another 200. Another 200. I don't write the figure because there is another adjustment at last. And if you don't understand this, ask your teacher to clarify it. Okay, but if you do these adjustments, I am pretty sure that you will be a bright student. Okay. So we go to the next one. 12th one. Company called for applications to issue 100,000 shares at a price of 10 per share on 1st February 2021. Only 80,000 shares were issued with applications received, and the shares were allotted on 31st March 2021. No other accounting records were made regarding the share issue other than the amount received with the applications were entered on the cash account and the long-term loan account. So what has happened? What has happened? Shall I take another page? Background color little dark. Right. Now, we wanted to issue 100,000 shares at 10 per share, but we were able to issue only 80,000. Therefore, though we wanted to issue 100,000, right, you were not able to issue 100,000, but you were able to issue only 80,000. So we allotted 80,000 shares at 10, that is 800,000 in thousands, 800. Share issue value is 800 because you issued only 80,000 shares, not 100,000, right? But this is included in the long-term debts. We know that it should be included in the stated capital, share capital, right? So long-term debts, as per the trial balance, long-term debts is 4,800. From this, deduct 800. Therefore, long-term debt should be 4,000, not 4,800. Okay, not 4,800. Right. So we will take the 800. We will take the 800 to the statement of changes in equity. Here, balances. Let's Write the balances first. 1st April 2020 as per the TB. Ordinary share capital 3,000, beginning balance. Revaluation reserve no balance. Then retained earnings 3,244. 44 and share issue. Share issue, it's 800 added to the stated capital or share capital. Okay, add to the share capital and deduct that from the long-term debts. Right. Next adjustment. 1/4 of the long-term debts as at 31st March 2021 is due to be repaid in the year ended 31st March 2022. What does that mean? 1/4, 1/4, right? Now let's come to the long-term debt. The correct value is 4,000. Of this, 1/4 is to be repaid during the year ended 31st March 2022. The next year, that is current liability. 1/4 is 1,000. Therefore, non-current liability is the remaining one is 3,000. So write down long-term debts. Long-term portion is non-current liabilities 3,000, current liability 1,000. Right, 1,000 and 3,000. Shall we write it quickly? 1,000 and 3,000. Non-current liabilities debt 3,000. Current liability debt here, debt current portion 1,000. Debt current portion 1,000. So we come to the last adjustment, last one. Sachi, with respect to the bonus payment, it has been paid after the year end. 820. Now this question is raised with respect to the bonus payment. Bonus payment is done, but when the bonus payment is done? Bonus is paid on 11th of May after the reporting period. So by the end of the reporting period, it is payable. Therefore, you can't adjust that to the cash. Got it? Yes. So we come to the last couple of adjustments. The court has determined on 20th June 2021 that a debtor with a carrying amount of 230 as at 31st March 2021 is declared as bankrupt. Very simple. Now, that is after the reporting period on 20th June 2021. And if you look at the last one, directors of the company have approved the financial statement for the year ended 31st March 2021 on 30th June 2021 for publication. So prior to this date, the bankruptcy has happened. Therefore, this is an adjusting event. So you can write it off. 230. 230 should be written off as bad debt or impairment loss. 230. So trade receivables minus 230. Minus 230, right? Trade receivables minus 230, and then come to the distribution cost. We call it as impairment loss. Impairment loss 230. That's it. Impairment loss 230. So we have done the question. So I'm doing the rest of the question within 5 minutes. Hope that you can do the calculations and balancing part, right? So if I come to the trial balance, PPE, all are done. Lands and buildings, machinery, motor vehicles, lease liability, inventory, sales. Sales we didn't take. Sales, quickly. Sales. Sales 4,820. And then service revenue, we have taken 1,200. Cost of sales 640. Straight away, I can take it here, 640. Trade receivables taken, cash 340. Cash 340 quickly. Cash 340 here. trade payables 630, trade payables 630 here, other payables 460, it is included in the note, we will take it from the note. Distribution cost, quickly, distribution cost, distribution cost given value is 420, administration expenses given value is 940, and finance cost given value is 135, finance cost, other expenses given value is 285. 285. And the long-term debts we have taken, ordinary share capital taken, dividends 124, dividends. So should be subtracted from the retained earnings 124. Dividends. That's it. So I'm taking the totals and hope you are working with me and helping me. Right. So yes, I come to this table, taking totals. Quickly, 715, 1020, 230, 420. Please check my answers. 2385. Admin 4075, 200 minus 150 plus 170, 820, 382 plus 940. 5000, sorry, 407.5. 200 minus 150 plus 170 plus 820 minus 382 plus 940. It is 2005.5. Please check my answers. 120 minus 20 plus 65 minus 250 plus 285. 200. Then 190 plus 135, 325. Are these answers correct? Are these answers correct? 460, 150 minus 170 minus 300, 180. Are these answers correct? Yes. So let's take these answers. Right of use asset carrying amount is 2145. Other payables 180. Distribution cost 2385. Administration expenses 2005 and 2005.5. Other expenses 200. Finance cost 325. So balances taken. Finance and other cost balances 285, 135 taken from the trial balance. Okay, so we will take the figures. Right of use asset carrying amount is 2145. 2145, and other payables coming from the note 180. 180. Okay, 180. And then I come to the income statement. Distribution cost 2385. 2385. Admin expenses 2005.5. Other expenses 200. Finance cost 325. And revenue, the total is 500, 6520. 6520 total revenue. No other income. No other income. Tax 517. Income tax 517. And then I come to the PPE note. That is the next difficult one. The cost is here 4000, here 5100. And accumulated depreciation here no balance, here just 200. 1100 plus 1100 plus 407.5 minus 55, it's 1452.5. Here 2520. And carrying amounts 4500 here. Hope that you are getting these points. And here 3300. 4000 minus 1452.5, it's 2547.5. 5100 minus 2520, it's 2580. Are these answers correct? Take the total of all these carrying amounts: 4500, 3300, 2547.5, 2580. Is it 12,927.5? Am I correct? Quickly. You have to be very efficient now, particularly at the end. 12,927.5. 12,927.5. Okay, so done. So let's take the profit and other figures. Quickly. The gross profit is 6,520 minus 640. It's 5,880. No other income. Add all these expenses: 2,385, 2,005.5, 200, 325. It's 4,915.5. Please check my answers. Therefore, PBT 5,880 minus this, it's 964.5 minus tax 517, it's 447.5 plus OCI 3,750, TCI 4,197.5. Am I correct? So we take the TCI here, but we have to record the profit and OCI separately. Profit is 447.5 to the retained earnings, and OCI 3,750 to the revaluation reserve. Take the totals. Here 3,800, 3,750 retained earnings. 3,244 minus 124 plus 447.5, it's 3,567.5. Are these answers correct? Quickly. Are these answers correct? Yes. Okay, so let's take these answers to the SOFT, then that's all. 3,800 stated capital, 3,800 revaluation reserve, 3,750 retained earnings, 3,567.5. No other receivables. Trade receivables 810 plus 200 minus 230, it's 780. So we can balance it. 12,927.5 plus 2,145. Total non-current asset 15,072.5. Total current asset 2,180, 780, 340. It's 3,300. Therefore, total asset 15,000, meaning 18,372.5. And total equity 3,800, 3,750, 3,561.5. It's 11,117.5. Non-current liabilities 4,039. Current liabilities, taking all these here. Total 630, 180, 451, 820, 135, 1000. It's 3,260. Total equity and liabilities. 11,117.5, 4,039, 3,260. Yes, 18,372.5. It balances. It balances. Okay. So it balances by, but don't forget to write the note number 2. Note number 2. So what I am circling should be written under the note number 2, note number 3 in this question. Disclosure note. So depreciation, impairment loss, again depreciation, audit fee, bonus provision, stock write-off, disposal loss, revaluation deficit reversal, lease interest. At least you have to write 4 items in the note number 3 in this question. Any questions? I'm getting lot of questions, but only thing is, as the time is limited, I will pick a few questions. I can show the SOFP. SOFP. Yeah. Yeah, if the service income is not available, you can avoid or you can remove the note number 1. Straight away you can take the sales. Why don't we debit the down payment of the lease asset? So what I worked out is correct. And if you have gaps, please ask from your teacher. And yes, in this seminar, it was done in this manner, but we have learned in this manner. So what is the difference? Okay. So here it is not the platform to clarify all these individual problems and gaps. You have like, for accounting subject, actually you have like 2 months, because end of the February you have the accounting subject. So you have ample of time. So you can look at the gaps and other things and ask from your teacher. I will pick few questions. you can't debit the down payment to the lease liability account as per the new standard. Yes, there may be some disclosure notes required as per the some SLFRSs, like inventory, NRV of inventory are decided based on batch method, and financial statements are authorized for publications on this date. All these are disclosure notes. Yes, they are required as per SLFRSs, but for the advanced level, we don't expect into that extent. All right. Items to be disclosed, the circled ones. Circled ones. Yes, you can start questions in your preference. You don't need to do the first question as the first question, right? So the first question is company accounting, but you can write the questions according to your preference. That depends on your name, that depends on your style. But usually in my case, I select the company question first because it is a compulsory question anyway. And also I take the second question because it is also a compulsory question. And out of 4, I select 3. That's my style, but that might be different from yours. So you have to select your approach, your style, and accordingly, you can attempt the questions as you find easily. Okay. So there is no hard and fast rule that you should do the first question first and second question secondly. No hard and fast rule. But it will be a relief if we do these 2 compulsory questions, isn't it? Okay, I think that we can have a break. Hope the organizers from Achievers are the other end. Yes, if the accumulated depreciations of PPE are not given in the TB, the value given in the TB are carrying amounts. Yes, I'm answering to these questions. Okay, income statement.
Yes. Hope you have found that lecture very interesting and hope you will apply the techniques and tactics you learned today at your exam. Now, we are going to play a video which I request you to watch until the end, paying full attention, because we got a surprise for you in this video.
Hi everyone, I hope you are getting prepared for your A-level exam. With that, let me give you some valuable points which will require for you. So I will not take that much of time, maybe 2-3 minutes. If you want to become a successful person in your life, if not, when you start to work in your corporate career, if you want to get to the next step, if you want to climb your ladder in the corporate career, what you have to understand is you should maintain a good balance between two parts. What are the two parts that you should maintain? One is when you are working for an organization, if you want to become a successful person in your career, first thing is you have to perform well. And next one is you should have the proper qualification. If you take we Sri Lankans, there are a certain set of people where they will perform really well when they are working, but they will not have proper qualification. There are a certain set of people, they will have lots of qualification, 4-5 degrees, but they are not performing well. But what you have to understand, if you want to become a successful person and if you want to climb your career ladder quickly, you have to maintain good balance between these two. You have to perform well, you have to build your qualifications as well. As I said you previously, performing well is not enough for you to become a successful person. Only having the qualification is not enough for you to be the successful person. So what you have to understand, for you to become a successful person, you got to have both the things. So here, why am I? I am going to tell you certain details which is required for you for this qualification, representing achievers. So let me give you some idea about Achievers. First of all, Achievers is the largest college, or I would say the best business school in South Asia. Why am I telling like that? Because we were able to win the Singapore CMO award twice for the best business school in South Asia. South Asia's best business school twice. And apart from that, if you take Achievers is one of the pioneer for professional qualifications, and our lecture panel, they have produced more than 220 Sri Lankan prize winners for the professional qualification and 25 world number one for these professional qualifications. Now you all are doing your A-levels, no? You know Sri Lankan number one for your O-levels, Sri Lanka number one for your A-levels. Likewise, for professional qualification also, there is Sri Lanka number one, there is world number one. So our lecture panel, they have produced 220 plus Sri Lankan number one and 25 world number one. So you can see how big Achievers is. And apart from that, one of the important thing is, if you take most of the CEOs in Sri Lanka, that means Chief Executive Officers in Sri Lanka, they are students of Achievers. They have followed some kind of qualification at Achievers. So in Achievers, what are the qualifications that we are doing, that we are offering for you? First one, I would like to say about the ACCA qualification. ACCA. These four letters stand for what? Association of Chartered Certified Accountants. So you know CA Sri Lanka. CA Sri Lanka is the local qualification. The global version of the CA, it is ACCA. So once you are done with ACCA, you are globally recognized chartered accountant actually. So this qualification is recognized more than 180 plus countries. So if you tell for someone in other country, I am done with ACCA, they know, okay, this is a qualified person because this person has completed ACCA. If you are doing ACCA, what you have to understand is, ACCA, yes, it is a professional qualification, but there is one added advantage you will get. What is the added advantage? While you are doing this professional qualification, which is ACCA, normally to complete ACCA it will take 2 years, okay? You can finish off your bachelor's program also. So how long will it take to complete the bachelor's program? How you will finish the bachelor's program? All those details you can call to Achievers and you can get those information. So what you have to understand, because I want to keep this session very short and sweet. So what you have to understand, if you take ACCA qualification, while you are doing the ACCA, you can finish off your bachelor's program with very little bit of effort. So if you take this ACCA program, now you might think, okay, ACCA is a very good qualification that for me to pursue or for me to study. Why I should select Achievers? Number one reason is Achievers is the largest college for ACCA in Sri Lanka. Why am I telling we are the largest college? Because we have the highest student count for ACCA qualification and most number of Sri Lankan prize winners and most number of world prize winners we have produced for ACCA qualification. And apart from that, our lecture panel, I am not required to say about that. You can ask anyone in the market who are the best lecturers for ACCA. Obviously, it is Achievers. And the next is CIMA qualification, CIMA. So nothing to tell about CIMA, right? Being Sri Lankan, we know what is the CIMA qualification is. What's the value of the CIMA qualification is. If you finish the CIMA qualification, the recognition that you are getting, it is immense. You know that. So if you take Achievers, Achievers is one of the pioneer for CIMA qualification in Sri Lanka. We started CIMA qualification 17 years back actually. Yes, we are doing this qualification for 17 years and our lecture panel is well qualified and they have produced lots of Sri Lankan prize winners and world prize winners for CIMA qualification as well. So if you are willing to study CIMA qualification, yes, again you can choose Achievers. In order to complete CIMA qualification, approximately it will take 2 years. So here at Achievers, we have designed a special program for our students. You can complete the CIMA qualification after A-level students actually. You can complete this qualification within 1 year and 9 months. We will call that program as a fast track program. So after your A-levels, you can come to Achievers and you can join Achievers for the fast track program. So within 1 year and 9 months, you can complete the CIMA qualification. You just think and see, now you might be maybe 18 or 19. By the time when you are 21, you are done with your professional qualification. So when you take the qualification, as I said you, there is something called professional qualification and there is something called academic qualification. So if you take this CIMA, ACCA, Chartered, AAT, all these are professional qualification. At Achievers, we are doing academic qualifications as well. So if you are expecting to do your bachelor's program or your degree program, if you want to do a bachelor's program in business management, degree program in business management, you can join Achievers. We have a program for business management as well. You can get your qualification from a UGC recognized university and a well-ranked university also. So the best part is you can finish off this qualification within 2 years. You can finish off your bachelor's program within 2 years. Normally to complete a bachelor's program it will take 3 years, but you can finish off your bachelor's program here at Achievers within 2 years with the same recognition. And apart from that, if you are expecting to migrate or if you are expecting to do your higher studies in Australia, yes, again we have a solution for that. We have a program for that. You can do your bachelor's program in Melbourne Polytechnic. So what you will be doing is you will be doing your first year, if not your diploma program here at Achievers. After that, for your second year and third year of the bachelor's program, you can directly go to Australia and you can do the qualification. You will be getting the direct entry. Whatever the foundation and diploma program that you are doing here, from that you will be getting a direct entry for your Australian, whatever the bachelor's program that you are going to follow. So these are the certain details that I want to give you. So as I said you, I hope I gave you a tip which will be required for your future career as well. Just I'll remind it. If you want to become a successful person, if you want to climb your career ladder quickly, perform well and have your qualifications. So I hope you got some good tips also from this particular session. Then I am wishing you all the very best and good luck for your upcoming A-level exam. Before that, I want to tell you one thing, very important thing. Very important thing. Actually, you all are really lucky to join this particular program. Why am I telling you all are lucky? For all the students who participated for this program, as the best business school in South Asia, we have decided to give you some special scholarship. So for your qualification, what are the scholarship that you will get? It is displayed on the screen. You can check it. So these are the scholarship that you will get to follow the respective programs. Then you might have a question, okay, how I can get this scholarship? Very simple thing you have to do. You have to send your name, school, and the program that you want to follow, and the code displayed for the number which is displayed on the screen. You have to send a WhatsApp message. So don't miss this opportunity. Write down the number now itself. But you have to send your name, school, the program that you want to follow, and the code which is displayed. So once you send these details, what will happen? From Achievers, you will get a message or you will get a letter saying that your scholarship is reserved. So very good opportunity for you. Don't lose this opportunity. Write down the number. Now itself, send the message, send a WhatsApp message, so you will be able to reserve your scholarship. So with that, I am done. Hi everyone. I hope you are getting prepared for your
Now we are got. Now, thank you for watching the video. Now you know that Achievers has a very interesting, very special scholarship program for those who joined us today. We are offering you a 50% scholarship for ACCA, 30% scholarship for CIMA, 30% scholarship for bachelor's degree, and 20% scholarship for study abroad. What you need to do is type your name, school, and the preferred program by you, and send us a WhatsApp message on 0771 253 203. 0771 253 203. You have to enter the code Nanasa 20 when you send this WhatsApp message. You have to enter the code Nanasa 20 when you send this WhatsApp message. Our representatives will immediately confirm your scholarship and they will get you enrolled into the scholarship program. And also, we are thinking of offering another special scholarship per school under special category. I keep the responsibility of this in the hands of the teachers of respective schools, where you have to select the top 3 students from the counting section of your school and send us a message with the position of the student and the name and the preferred program by them. So we will be giving them a very special 80% discount for the top student, and the second place will get a 70% discount, and third place will get 60%. Those 3 special scholarships will be given to top 3 students of each school. This is either for ACCA or CIMA programs. The special category scholarships are for ACCA or CIMA programs. You can WhatsApp those information also to 0771 253 203. And also, you are free to contact this number. You can call us for any scholarship related inquiries. Apart from that, we have a special announcement to make about another CSR project by Achievers. You can see the book that I'm holding here, which is a monthly magazine. The name of the magazine is Question Bank. Name of the magazine is Question Bank. This magazine is specially designed for advanced level students to get an aid to be prepared for your exams. As a CSR project, Achievers has been sending this magazine absolutely free of charge to all the teachers island-wide who got subscribed for this. If any of you still didn't get this magazine delivered to you, please send us a message on 0773 125 365. Please send us a message, or you can call us on 0773 125 365. 0773 125 365. And also, students can get the PDF version of this magazine downloaded from the website www.questionbank.lk. Students can get this magazine downloaded from the website www.questionbank.lk. And thank you, everyone. We can now continue to the next part of the session. I invite Senior Lecturer Mr. Chaturanga Sandaruwan from the Department of Accounting, University of Sri Jayawardhanapura, to continue the session.
Okay, so we have now completed the first compulsory question, and now we are going to get into the second compulsory question. You know that the second question comes from the management accounting, right? So it is also a compulsory question which carries 40 marks. So if you do these two questions, and you have to select another 3 questions out of the 4. Therefore, we will look at the question number 2 and finish it off quickly, and then we can discuss the other questions. We come to the question number 2. Look at the first part, A. The following information is provided regarding a product manufactured by a manufacturing company. The direct material required per unit and purchase cost per kilogram is, now there are 2 direct materials, X and Y. To finish 1 unit of finished good, it requires 2 direct materials, namely X and Y. From X, to finish 1 unit of finished good, it requires 750 grams. 750 grams and 200 per kilogram. If you read the sentence carefully, look at this: direct material required per unit and purchase price per kilogram. So to finish 1 unit of output, it requires 750 grams of X. The price of a kilogram is 200. The second material is Y. It requires 2 kilograms at 150 per kilogram. Direct labor cost required per, direct labor should be hours, right? Direct labor, you can cut this off. Direct labor required per unit, 3 hours. Direct labor required per unit, 3 hours. The product is expected to produce 8,000 units in the coming year. Now, this is regarding the finished product. This is regarding our final product. The 2 types of direct materials are ordered separately. So you can see that there are 2 materials, X and Y. They are ordered separately. The order cost and the holding cost, retention or holding cost per unit are as follows: X and Y. Cost of an order 750 for X and 12,000 for Y. Holding cost per unit for X 4 rupees, for Y 4.5 rupees plus 1% of the purchase cost. Then it says the business is currently ordering 3000 units at a time from the material X, and with respect to the material Y, the economic order quantity being determined and ordered. Right. And then in the table given, we can see for X and Y, the maximum daily direct material usage and average daily direct material usage, time taken to receive the materials ordered, 4 to 8 days, 10 to 24 days. And lastly, we are given another information. Labor is paid at 800 per hour. Calculate the following. For material X, reorder level, maximum stock level, annual order cost if ordering economic order quantity. For material Y, economic order quantity, minimum stock level, average stock level. And this is actually a separate question, right? This is a separate question. It is not any, it has no any association to the material Y. Direct cost per unit of good. Direct cost per unit of good. Right. So let's do it. Question number 2. Question number 2. Right. For material X, until I do, you can start doing, right? Then you can compare your answer with my answer. For material X, we need to calculate the reorder level. Reorder level. You know that reorder level is equal to maximum consumption multiplied by maximum lead time. Okay, maximum consumption into maximum lead time. Maximum consumption is given for X 30 days. Sorry, 30 kilograms. 30 kilograms. And maximum lead time is given for X 8 days. Now look at here. The consumption and the time are given for a day or in days. So you have to have the same basis. Consumption a day, time in days. So you have to have a same basis. And if the consumption is given for a week, the time should be expressed in weeks. If the consumption is given for a month, the time should be stated or given in months. So you have to have a same basis. Days, days, weeks, weeks, months, months. Right? But in this question, it is very simple because the same base, maximum consumption a day, time in days, same basis. You don't need to convert it. But if you look at the past paper questions, in some cases, the students or rather the questions are given with different bases. I think that you get my point. Okay, now here no difference, I mean no problem because the same basis is given. Maximum consumption a day and time is given in days. Okay, right. So we can multiply 30 multiplied by 80, it is 240. 240. Answer for the first question is 240. Second question. Maximum stock level for X. You know, maximum stock level is calculated reorder level minus minimum consumption multiplied by minimum lead time plus reorder quantity. Reorder quantity. Reorder quantity. Okay. So reorder level is calculated earlier, that is 240. We can substitute the answer here. And minimum consumption we have to find. We have to find. The average daily consumption is given for X21. So how to calculate this? Average is 21. So you can multiply this by 2. Therefore, it is 42 minus maximum is given 30. Maximum is given 30. Therefore, minimum is 12. You know how to get it, right? So you know that average is equal to max plus min divided by 2. So if you substitute answers, average is 21, max is 30, and we don't know the minimum divided by 2. So you can multiply 21 multiplied by 2, it is 42, and 30 can be transferred to the other side, therefore it becomes minus. Therefore 42 minus 30, it is 12. Okay, so the minimum consumption is 12 units a day. And the minimum time is given as 4 days. Very simple, 4 days. Then reorder quantity. Reorder quantity. Now, if you look at the sum, it says the business is currently ordering 3,000 units at a time from the material X. So their current order quantity at a time is 3,000. So 3,000. So what is the answer? The answer is 240 minus here 12 into 4 means 48 plus 3,000. It's 3,192. This is the answer. 3,192. The next question, annual order cost. If ordering economic order quantity, but they are currently ordering 3,000 units at a time, but we don't know whether this is economic order quantity. So first thing, we have to calculate the economic order quantity, right? Third question, shall we erase this part? Right. To answer the third question, first I calculate the economic order quantity. Economic order quantity. Economic order quantity. So how? 2 multiplied by D multiplied by CO divided by CH square root, right? So 2 is a constant, D is the annual demand. Now, from the finished product, we expect to produce 8,000 units in the coming year, right? 8,000 units in the coming year. But to produce 1 unit of the finished good, it requires 750 grams. Now you have to have basic understanding about the measurements, right? Now kilogram has 1,000 grams. So if the figure is given as 750 grams, it is 75% of the kilogram, isn't it? So we have to convert this into kilograms, because we are taking the material X. We are not taking the finished good. We are calculating all these stock levels and other information for the materials, right? So we expect to produce 8,000 finished goods in the coming period, but to produce 1 unit of finished good, it requires 750 grams, right? Therefore, you can calculate the total demand of material X. How? 8,000 finished goods into 0.75 multiplied by cost per an order 750 is given straight away, and divided by holding cost per unit is 4 square root. What is the answer? 2 into 8,000 into 0.75 into 750 divided by 4. It's 2,225,000. Square root of that 1,500. Economic order quantity 1,500. But they are currently ordering 3,000 at a time. The question is not this. Question is, if the economic order quantity is ordered, what is the annual ordering cost? Annual ordering cost. So you know that annual ordering cost equals cost per order multiplied by number of orders. Very simple. Cost per order we know that is 750. 750 substituted here. Number of orders. Now you order materials at 1,500 units at a time, right? So this can be found by dividing the order quantity from the demand, right? Now you can substitute figures. We require 8,000 multiplied by 0.75. We require 8,000 multiplied by 0.75 means 6,000 kilograms. 6,000 kilograms for material X. That is the demand, which is taken here, right? And at a time now, we are ordering 1,500. At a time, we order 1,500 kg. Therefore, we have to order 4 times, isn't it? 4 times. 4 times. 4 times, right? 1,500 at a time. Total requirement is 6,000 kgs. Therefore, we have to order 4 times, right? So one order cost us 750. That into 4, 3,000. The answer is 3,000. Answer is 3,000. Got it? So this is a very good question. You need to have the proper understanding about the material costing to answer this question. Right? So the next question, next one. Fourth one, with respect to material Y. Material Y, economic order quantity. Economic order quantity. Now we know the formula 2 multiplied by D multiplied by CO divided by CH. Square root. Right? 2 is a constant. Again, the demand. We expect to produce 8,000 finished goods. And if you look at the upper section of the question, it says from material Y, it requires 2 kgs for a unit. Therefore, 8,000 into 2, 16,000 is the demand. Cost per order is given in the table 12,000 divided by holding cost. Now, holding cost, it says 4.5 fixed cost plus 1% of the purchase cost. Now, purchase cost of a material kilogram of this Y material is 150. Purchase cost is 150. That into 1%, isn't it? 1%. Right? So here the answer is 1% means 1.5. 4.5 plus 1.5 is 6. So we can find the economic order quantity. Quickly find it. Right? Square root, right? Square root. 2 multiplied by 8,000 multiplied by 2 multiplied by 12,000 divided by 6. It is 64 million. Am I correct? 64 million. Square root of that 8,000 units. 8,000 units. Units means kgs. Got it? Now that is the answer for the fourth question. Economic order quantity of material Y, 8,000 units at a time. Number 5. Number 5. Minimum stock level. Minimum stock level. How? Minimum stock level is calculated as taking reorder level minus average consumption multiplied by average lead time. Right? So we have to calculate the reorder level. And earlier we saw the formula, reorder level is equals to maximum consumption multiplied by maximum time. Maximum time. Okay. Maximum consumption is given for Y. Maximum consumption a day is 70. That is known. And also maximum lead time for Y is 24 days. 24 days. So you can take the reorder level. 70 into 24, it is 1680. So reorder level is calculated. Got it? Right. Then average consumption. It is known. It is given. Average consumption is 55. Multiplied by average lead time. Right? Maximum time is given as 24 days. Minimum time is 10 days. Add these two figures together and divide by 2. 34 divided by 2, 17, isn't it? 17. Right? 17. If my calculations are wrong, please let me know. So the answer is 1680 reorder level minus 55 multiplied by 17. It's 745. Answer is, here answer is 745. All these are kilograms, I mean units. Then we come to the sixth question, sixth one. Average stock level. Average stock level. Now you know that to calculate the average stock level, there are two formulas. First one is minimum stock level plus maximum stock level divided by 2. Minimum stock level plus maximum stock level divided by 2. That is the first formula. Second one is minimum stock level plus reorder quantity divided by 2. Right? So there are two formulas. You can select either one, but you get different answers. I know that you are aware about these changes, right? Now, here I take the second formula. The reason is, second formula is minimum stock level plus reorder quantity. Reorder quantity divided by 2. The reason for taking this formula is, now we know the minimum stock level, right? And also we know the reorder quantity, that is 8,000. So we can simply get the answer in a short time. But if you take the first formula, again we have to calculate the maximum stock level. It will take some time. So you have to be strategic at the examination to save the time. Okay, so if I take the first formula, again I have to find the maximum stock level. It will take some time. So it is unnecessary. Right? So what I did is, I took the second formula. So all the information for the second formula is here. Therefore, minimum stock level is 745 plus reorder quantity is 8,000 at a time divided by 2, that is 4,000. 4,000 plus 745, answer is 4,745. 4,745. Got it? And remember, the other formula gives us a different answer, not the exact answer. Right? Question number 7. Question number 7, that is a separate question. No association to the material Y. That is a separate question, right? So the question is direct cost per unit of good. Direct cost. You know that direct cost is equal to direct material, direct labor, and direct other. Right? Direct other. So in this question, we are not given any information about direct other. We don't know. But we know the information about direct material and direct labor. So adding these two together, we can get the direct cost of a unit. Right? So let's calculate. Direct material, there are two, X and Y. X and Y. Now it says to produce 1 unit of finished good, it requires 750 grams, 0.75 kgs. 1 kg cost us 200. Therefore, to produce 1 unit of finished good, it requires 150 cost of material X. And from material Y, it requires 2 kgs a product. 1 kg cost us 150. It is therefore 300. 300. And in addition to the direct material cost, you know, we have to have the direct labor cost. Direct labor cost, and it is very simple. In the question, it is given to produce 1 unit. It requires 3 hours. 1 hour cost us. At last, we are given the hourly rate 800. 800. Therefore, it is 2,400 altogether, 2,700, 2,850. This is the answer. Any questions on this question? I mean, any issues that you have regarding this question? No. Right. So let's get into the second part of the question. Second part of the question. And it's from the overhead section. Overhead section. What does it say? The Induvara company manufactures and sells a wide variety of toys. The company has 2 manufacturing units and a division called store to provide services to the manufacturing sectors. Below are the overhead cost and other information for the upcoming period. For the upcoming period. So these are estimations. These are estimations. Estimated cost and other information. So we have 2 manufacturing or production departments or units, finishing 1 and finishing 2, and we have 1 service division that is called as stores. We have been given production units 2,000 and 3,000 in each division. Direct material cost 2 million, 2.7 million, and also we are given the direct material unit cost, rupees 500 per direct material unit. For finishing 2, rupees 300 per direct material unit. Then we are given the direct labor cost. As earlier, the total cost is 1.2 million and 2.25 million. And also hourly rate is given. Rupees 200 per hour for finishing department 2, rupees 300 per hour. Indirect materials, indirect labor, machine hours, land area square feet, number of employees, and other manufacturing overheads. Under that, material handling, cleaning in the factory, employee welfare expenditure, machine maintenance, electricity, water, and telephone. The overhead cost of the store should be distributed among the respective divisions based on the direct material cost of the production division. Based on the direct material cost of the production divisions. That means service departments or service divisions overhead cost should be reallocated to the production divisions based on the direct material cost of each production department. Finishing division 1's overhead costs are absorbed based on machine hour. That is 1. And divisions 2, it should be 2. Division 2. Overhead costs are absorbed based on direct labor hours. This should be 2, right? In March 2021, company produced 2 types of toys, A and B. And the following information is provided with this respect. Both toys A and B are manufactured across both production divisions. This should be A, type A. This should be B. Direct material usage per unit 2.5, 3.5. Direct labor hours required per unit, machine hours required per unit, and lastly, purchase cost of direct materials in March 2021 has not been changed. The requirements: overhead cost analysis sheet, calculate the separate overhead absorption rate for each production department or divisions, and calculate the total production cost of each type of toy manufactured by the company. So this is fairly a simple question because in managing your time, you can take this question as a simple question, because the company accounting question will take longer time than expected, but the management accounting question will take only few minutes. So you can save time here, and the saved time can be used for another question. Now I told you company question number 1 should be completed within 36 minutes, right? And question number 2 also same. How do I take this? Taking the all given time, all given minutes divided by number of questions, right? 36. But you can think combining these 2 questions, all together 72 minutes for both questions, question number 1 and 2, right? Assume that you take 45 minutes for company accounting, 45 minutes, meaning 9 minutes extra, 9 minutes extra. Then you can save your time from the question number 2. That doesn't happen always, but in some cases, like this question, right? So we can do this question quickly. So if you can complete this question by at least 30 minutes, so for these 2 questions, you have spent 75 minutes. So it's still 3 minutes longer than the expected. So from another question, you can save 3 minutes. That's how this game is to be won. So this is a game. So you have a target. You have to get the good result plus within the given time. So this is kind of a game. Okay, so what I was telling you, this management accounting question can be completed quickly, and if you are having the good practice. Okay, good practice. Right. So without not wasting, actually, this is also important. Without spending more time on this topic, let's begin the overhead cost analysis sheet. Question number 2, part number B. Overhead cost analysis sheet. So we have to have the item, then basis, then cost, 2 production divisions, 1 service division. Item, basis, cost, to production divisions 1 and 2 and stop. Right. Remember that we need to take only manufacturing overheads. What? Manufacturing overheads to the overhead cost analysis sheet. And therefore don't take direct cost and also don't take non-manufacturing overheads. You have to take only the manufacturing overheads. So in the question, we are given indirect materials. First item, indirect materials. Indirect materials. And don't take direct cost. So it is being allocated. Therefore, we can take the basis as direct because we know it directly. Division 1, 651,500. Division 2, 800,000. Division 3, 103,000. And then we can take indirect labor. Indirect labor. Again, basis is direct. Division 1, 730,000. Division 2, 615,000. And store 70,000. So those manufacturing overheads are allocated directly. But if you take the other manufacturing overheads, which are given at the below of the table, material handling, cleaning in the factory, and so on. So they are common overheads, common. So we have to allocate them using a suitable basis. So I take material handling. Material handling. Material handling. Now we have to select the basis because this is a common in nature. But the basis is given in the question in front of the figure. I mean, cost 520,000. You can see within a bracket, it says should be allocated based on the direct material usage. Direct material usage. Okay? Direct material usage. Direct material usage. So we have to calculate the direct material usage of each production division. So I take a working, right? Production division 1 and 2. And if you look at direct material cost is given as 2 million. 2 million. And here 2.7 million. But based on the direct material usage, I mean the quantity. So to find the quantity, we can divide the total cost by price per unit. It says rupees 500 per direct material unit. So if I divide this by 500, I get the quantity usage. Here divided by 300. Here is that 4,000 units. 9,000 units. Am I correct? 2 million. Yes, 2.7 million. Yes. So altogether 13,000. So you can simplify the number. 4 is to 9. 4 is to 9. Therefore 30. So you can divide this by 13. The total cost can be divided by 13 multiplied by 441 multiplied by 942. Okay. So do it. Right. So 520 1000 divided by 13 multiplied by 4, it's 160. If I am wrong, please let me know. And multiplied by 9, it's 360, and no for store. Got it? Right. The next item, cleaning in the factory. Cleaning. The cost is 228,000. And if we look at the given information, we are given machine hours, land area, square feet, number of employees. From the given information, we have to select the land area, right? No other suitable basis is given. Therefore, square feet. So if I take the summation, square feet of 1, 2, and even store, here 1000, here 2000, store 800. So you can simplify this. 10, 20, 8, further 4, 10, 5, total is 90, isn't it? Total is 19. 19 is the total. So you can divide the total cost 228,000 by 19 multiplied by 5. It's 60 for finishing department 1 multiplied by 10, 120,000 multiplied by 4, 48,000. If I am wrong, please correct me. Then we get the next one, employee welfare. Obviously, number of employees is the basis. The cost is 420,000. So we can take the number of employees, get in summation, here 55, here 40, here 5. So you can simplify it further, 1, 8, 11, isn't it? So total is 20. Therefore, 420,000 divided by 20 multiplied by 11, it's 231,000 multiplied by 8, 168,000 multiplied by 1, 21,000. And then machine maintenance. The cost is 487,500. It's machine maintenance. Therefore, the suitable basis would be machine hours. So machine hours are given. 4,500, then 2,000 and 800. Again, you can simplify 8, 20, 45. Yeah. So it is how much? 45, 53, 73. Am I correct? 73. 487,500 divided by 73. Wait for a while. I think there is a mistake. Give me 1 second. We don't get the yeah, I guess it. Please, this figure, please cut this off. Machine hours in the store department, cut it off. Yes, cut it off. Because usually at the examination, you get the complete numbers. No, not decimal numbers. Therefore, cut it off, right? 800 should be cut. 800 here. under machine hours, right? Got it corrected. So please cut this off, and therefore total is just 65. So get the allocated figures. 487,500 divided by 65 multiplied by 45, it is 337,500. And multiplied by 20, it's 150,000. And please cut the machine hours of the store department, therefore no cost for the store department. And last one, electricity, water and telephone, the cost is 190,000. The suitable basis should be based on the given information, square feet. Right? So we got the summation of square feet. If I am not correct, if I am not wrong, it is this one. 1,000, 2,000, am I correct? 1,000, 2,000, 800, yes. So we have simplified it, 19. Divide by 19, multiplied by 5, 10 and 4 respective departments. 190,000 divided by 19 multiplied by 5, it is 50,000 here. Multiplied by 10, it is 100,000 here. Multiplied by 4, it is 40,000 here. So you can take the total cost of each department or each division. Okay, let me take it quickly. 651.5, 730, 160, 60, 231, 337.5, 50. It is 2,220,000. Then division 2, 800, 800, 615, 360, 120, 168, 150, 100. 2,313,000. Store 103, 70, 48, 21, 40. 282,000. Are my answers correct? Can anyone confirm? Are my answers correct? Yes. Okay. So we have calculated the overhead cost of each division up to the primary allocation. So we have to reallocate the overhead cost accumulated at the service department. This should be reallocated, right? So I take the store department, and the basis is given in the question. Yes, allocating the material handling, we have to use the direct material usage. So that is why we took the quantity. We are not having the closing stocks, right? So as we don't have the closing stocks, the material quantities have been used. Therefore, based on the quantity we have divided, we have allocated the material handling cost. Are these answers wrong? Some say first one 1,563. Did I make a mistake? Did I make a mistake? All right, correct. Okay, if you get a different answer, please check, because majority say that this is correct, right? Okay. Okay, right. So I am redistributing the store department's overhead, that is 282,000. And in the question, the basis is given, right? Basis is given. Let me show it. Look at this. Overhead cost of the store department or store division should be distributed among the respective divisions based on the direct material cost. Direct material cost. Direct material cost. Okay, so we know the cost, that is 2000 and 2700. If you simplify this further, 2027, 2027, that is 47. So 282,000 divided by 47 multiplied by 20, it's 120,000 for the finishing one. And 27 for the second one, it is 162,000. Now based on the direct material cost, earlier usage, now cost. Got it? Cost is 2 million and 2.7 million, right? Based on that figure, we can divide the store department's overhead. Now we can get the total again. Here 0, 2220 plus 120, it is 2340, 3 zeros. Here 2313 plus 162, it is 2470, 75, 3 zeros. Now we have completed the overhead cost analysis sheet. So we can easily and quickly calculate the overhead absorption rate for each production division. Each production division. Right? Okay, so I am taking these figures. Shall I erase this part? Then I can use this area. Okay. Now the second question, overhead cost absorption rate. We call it as overhead absorption rate. Right? So for the first department, that is department 1, first one, budgeted overhead cost is, now we know, 2,340,000. That is budgeted overhead cost. This figure. Right? And its basis is, as per the question, its basis is machine hours. So we know the machine hours of that department. Machine hours of finishing department 1 is 4,500. Divide by 4,500. Budgeted overhead divided by budgeted machine hours. So we get 2,340. Yes. 520 per machine hour. That of department or the division 2. The budgeted overhead is 2,475 3 zeros divided by what? Divided by, did I make a mistake? Some say that the answers are not according to my answers. Did I make a mistake? Please check. Right, okay. So here the second division's basis is direct labor hours. So we have to find it. Direct labor hours. How? The total direct labor cost is given. Total direct labor cost is 2,250,000. Right? And we know that hourly rate is 300. Therefore, 2,250,000 divided by 300, we get total direct labor hours 7,500. So it is very simple. 2,475,000 divided by 7,500, we get 330 per direct labor hour. So the second question is also done. 330 per direct labor hour. So we have to do the last part of the question. Last part of the question. What is the last part? The last part of the question, calculate the total production cost of each type of toy manufactured by the company. So the company manufactures two types of toys, A and B, A and B. Right. So I take the next page to answer the question number 3. Right. So it has two products, A toy and B toy. Now it requires to calculate the total production cost. Total production cost. You know that total production cost is equal to direct cost plus manufacturing overheads. Right? Total production cost is equal to direct cost plus manufacturing overhead. So we have to take the direct cost first. Let me take a table like this. So I take direct material. Now here in the table it is given 2.5. I mean here. Right here. Now this is the actual data pertaining to the production happened in March 2021. Actual data. Now look at here it should be type A, direct material usage per unit direct material usage 2.5. Now for material B 3.5, right? And actually yesterday we conducted the Sinhala medium seminar. The same paper was given and some of the students raised a question regarding this material cost, but it is not, I mean, question answer is correct. What I discussed is correct. Okay, because we have been given two types of materials. Finishing department one type of material, finishing department 2 another type of material. Now what happens practically, a particular department adds a particular material to the product. Okay, the product is passed through both departments, but one department can add a particular material to the particular product. One department is not necessary to add materials to both products. Therefore, the question is correct. There is no mistake in the question, right? So we will take. You can see in the table which I showed you earlier, 2.5, right? 2.5 per unit material usage. Per unit material usage is 2.5. And if you look at the description, even the above table, the finishing department 1's material price is 500. So we have to assume that finishing department 1 adds material to the product A. Okay, that is an assumption. Finishing department 1 adds material to the product A, right? Therefore, the finishing department 1's direct material cost is 500. So you can take the cost. 2 is 1,000, 1,250. 1,250. Similarly, for B, to produce 1 unit of type B, it requires 3.5 material. We have to assume that finishing department 2 adds material to the product B. Finishing department 2 adds material to the product B. Therefore, material cost is 300. How much? 300 into 3.5, 1,050. Now direct material cost is done. So we take the direct labor. And here it is given separately. Finishing 1 and finishing 2, right? So we will take the product A first. Finishing department 1, 3.5 hours. Finishing department 2, 3 hours. Now finishing department 1, you can say finishing 1 and finishing 2. Finishing department 1, 3.5 hours, and hourly rate is given above. Hourly rate is 200 per hour. And finishing department 2, number of hours 3, that multiplied by finishing department 2's direct labor hourly rate is 300. Right, take the figures. 3.5 into 200, it is 700. Here 900. Similarly, you can take for the B quickly. Finishing department 1, 2 hours. 2 hours into 200, 400. And finishing department 2, it requires 3.5 hours. That into 300. Is it 1050? Check my answers, right? 1050. So taking all these together, you can take the direct cost. Direct cost. 1250, 700, 900, it is 2850. Here 1050, 400, 1050 again, 2500. Then manufacturing overhead. Manufacturing overhead. Similarly to the direct labor cost, we have to take separately. Finishing 1 and finishing 2. Okay, you know the overhead absorption rates. Finishing 1, overhead absorption rate is, as I remember, 520 per machine hour. That of department or division 2, 330 per direct labor hour. Remember, 520, 330. 520, here also 520 because same department, and department 2, 330. 330 and here 330. Okay, so then consumption can be taken. Here first department 520, 520, second department 330, 330, right? Finishing department 1, it uses the machine hours as the basis, machine hours. So I take the machine hours required per unit of finishing department 1 hour. Look at that, 1 hour. Right? For the product B, machine hours required per unit from the finishing department 1, 1.5. And then finishing department 2, the basis is direct labor hours. Take the direct labor hour column. Direct labor hour column. Right? Direct labor hour required per unit. Finishing department 2, remember, finishing department 2, 3 hours. And for the type B, direct labor hours required per unit from the department 2 is 3.5. 3.5. Then take the total. That is the answer. And just check my calculations here, 520. Here 3 into 330, 990. Here 1.5 into 520, 780. Here 3.5 into 330, 1155. Taking the totals of all, 2850, 520, 990. It is 4360. Here 2500, 780, 1155. 4435. Are my answers correct? Yes. Finishing 2 hours. Finishing 2 direct labor hours. Finishing 2 direct labor hours. Did I make a mistake? Finishing 2 direct labor hours 3.5, correct. Here 3. Then finish in 1 machine hours. Finish in 1 machine hours. Machine hours finish in 1. 1 hour 1.5. Correct. Now this is my PDF. I don't know whether you have a difference in here. Just look at whether this table is agreed to your table in the paper. Now based on this table, did I make a mistake? Based on the paper that I have, I think my answer is correct. Isn't it? All right, make it correct. Make it correct. If there is a difference, make it correct in your paper. Or else you can keep the same answer, because as per your paper, it is correct. Doesn't matter. Okay. Right. So we have done 2 questions in the morning session, and I think that it's the time for the lunch break, because it is closer to 12:30. Any information from the organizer's end? Okay, I think that we can break for the lunch and then have the evening session. Right, let's start the evening session at 1 o'clock. Okay.
during the break, I request you all to stay with us without leaving the Zoom meeting. And also I need to make an announcement. I think I've made a small mistake while I was giving the contact number. You need to send the request for Question Bank magazine. I think I have made a mistake previously when I gave you the contact number to request to deliver the Question Bank magazine. Now I'm going to repeat the number, the correct number. Please write it down. 0773 125 364. 0773 125 364. I think I have mentioned 5 instead of 4 when I gave you the contact number last time. Please take this down, and you can get this delivered to you. You can get this Question Bank magazine delivered to you if you contact us through this number 0773 125 364. 0773 125 364. And for those who are with us today, still you all can enroll for our scholarship programs. And I request you to spread the message, inform your friends, tell about us, and ask them to enroll for programs that Achievers conducting, ACCA, OCIMA, which will definitely be a turning point of your future professional life. Joining with Achievers will definitely be a turning point of your professional life. And I'm repeating the number that you need to contact us to get the Question Bank magazine 0773 125 364. 0773 125 364. For those teachers who didn't get the magazine yet, they can contact us on 0773 125 364. Thank you. After the break, we will be starting the next session at 1 p.m. We will be starting the next session at 1 p.m. and it will continue until 3:30. Thank you.
Achievers Lanka Business School was established in 2006, bringing together 5 leading lecturers in the SEMA industry with a vision of directly contributing to the corporate world by attracting high-caliber students and molding them to be outstanding professionals. Achievers, an approved SEMA Learning Quality Partner, is an accredited center for SEMA exams and provides facilities for classroom learning and independent and group studies. With an annual intake of 6,000 students, Achievers is a leading institute for SEMA in Sri Lanka. We attract the brightest and the best and guide them to unleash their potential. We are passionate about transforming lives and achieving aspirations. Achievers won Asia's Best Business School Leadership Award in 2010 and 2012 and a Silver Award at the Slim Brand Excellence Awards in 2012. At Achievers, we go beyond providing a mere qualification for our students. We give prominence to personality development. We provide a platform for our students to take part in activities outside the classroom so that they are well groomed to enter the corporate world with an all-round personality. We are the first and only SEMA business school to have set up a Rotaract Club and a Leo Club, both of which have prospered and gone from strength to strength in the last few years by organizing successful projects. Our students grab the future. They make a difference because success stories don't just happen. They all start somewhere. Achievers, where the good becomes great.
Hi, I'm Teshani. I was Ireland first at the 2019 A-level exam from the Commerce stream. After my A-levels, I chose to study ACCA because it's respected globally and well recognized and sought after by many employers around the world. Also, the knowledge and skills provided by ACCA are very relevant and practical to today's ever-changing business world. I'm currently studying ACCA at Achievers, and something I realized while studying at Achievers is that the lecturers are fantastic and they genuinely care about their students and help them reach their potential. Also, the classrooms are very interactive and lecturers even take time to provide one-on-one support to their students. QBR sessions and the revision classes before exams are very effective and well tailored to bring out the best in you and also increase your confidence before your exam. At Achievers, you can also get a lot of flexible options like studying part-time, full-time, or even studying online, which I think is very convenient as a student. So I would like to recommend studying ACCA at Achievers to any student who aspire to become a professional accountant.
Achievers, where good becomes great.
Hi, I'm Sarnimudan Naik, a 19-year-old TV presenter, voice artist and an ACCA affiliate. I started off my ACCA right after O-levels at Achievers. Initially, I thought of ACCA as a very difficult qualification, but later realized that it is not. It is a globally recognized professional qualification that you could do right after O-levels, because I did it. I did not just participate in ACCA-related activities, but also did many other things. I was an Interact as well as a Rotractor. I did my A-levels as well as started off my career as a media presenter. So you see, you just do not need to be focused in one area when you do ACCA. The best part about ACCA is the tuition provision. Achievers made ACCA very, very easy for me. They have a specific program called the Pro Teens Program, Professional Teenagers. Now this program helps us right after O-levels to understand the way of ACCA, eases us into a professional qualification. This helps us break our mindset from being normal teenagers who are just after O-levels to being teenagers who are very professional. And the best part about Achievers is that it's fun, the lecturers are awesome, and it's all in all friendly. If you are right after O-levels, confused about what you're supposed to do, I would recommend ACCA at Achievers.
Achievers, where good becomes great.
Hi, I'm Shinal Gunawardana and I'm the head prefect of St. Joseph's College for the years 2019-2020. After completing my A-levels, I decided to join Achievers to follow up on CIMA, and I think that it was one of the best decisions I've ever made due to many reasons. They don't just teach you the syllabus content, but rather they train you and prepare you for final exams by implementing a series of mock exams. And also, despite of how many students there are in a class, they make sure that each student get personal attention and one-to-one support. Therefore, I urge you to join Achievers to complete in your CIMA qualifications.
Achievers, where good becomes great.
Hi, my name is Hashan Hettigara and I'm a past head prefect of Royal College, and I'm currently pursuing my undergraduate degree in mechanical engineering. Having been a prefect, it was hard to manage time to do anything else. But due to the fast-track course offered by Achievers, I was able to complete my ACCA knowledge within just 3 months. And this enabled me to hopefully finish my ACCA qualification within just 1 year and 9 months. And this was not just because of the effort that I should put in, but this is due to the help and support given by the lecture panel, who maintain the highest pass rates and the highest number of world ranks within Sri Lanka. They offer one-to-one support or anything else that you require at any time. So if you are planning on joining ACCA or CIMA, I do recommend that you join Achievers.
Achievers, where good becomes great.
I'm Hamshika Mohanadas, Head Prefect of Savamangir Vidyalayam, Prefects Guild 1819. Have chosen CIMA for my higher studies because it's globally well-recognized professional qualification and it also supports my future career. I joined Achievers to follow CIMA because the classroom systems are good. They conduct both online and physical classes. If you are out of Colombo, you can join the online classes, and trust me, you will get the experience as you are in a normal class because the online classes are much more effective now at Achievers. Therefore, join the best lecture panel for CIMA and ACCA and start the journey for a successful life.
Achievers, where good becomes great.
Hi, I'm Yunus Nasrullah. I'm working at PwC as a senior associate. I started ACCA right after O-levels, and now I'm done with the ACCA qualification, the BSc degree in Applied Accounting, and also I have gained the membership from ACCA, all at the age of 20 years. I started my ACCA journey at Achievers by enrolling into the Protein program. Protein means professional teenagers. This program is specially designed for the students after O-levels. Here at Achievers, the lecturers are very friendly, and also not that, the content that they deliver is very easy to understand. And also at Achievers, it's not just about ACCA and the studies only. They have several other programs which molded me to what I am today. I'm glad that I chose Achievers right after O-levels. I would recommend you Achievers if you want to complete your ACCA and the BSc degree in Applied Accounting in a short period of time, and also with the best lecture panel that you would ever get.
Achievers, where good becomes great.
And also, I need to remind you on our special scholarship programs where you still have chance. We have some more slots. You still have the chance to get enrolled for our scholarship program. You can send us a WhatsApp message to 0771 253 203. 0771 253 203. Also, those who didn't subscribe for our question bank magazine can contact us on 0773 125 364. 0773 125 364 and get the magazine delivered to you free of charge. And the students who wants the magazine can get it downloaded from the website www.questionbank.lk. www.questionbank.lk. And I invite again Mr. Chaturanga Sandarwan, Senior Lecturer of the Accounting Department of Accounting, University of Sri Jawahardanapura, to continue and get the paper discussed for the second session. Thank you. We have sent the PDF file for the rest of the question. Please take it downloaded, get it downloaded, and be ready for the second session.
Right. After the lunch break, again we are meeting to spend about 2 hours to discuss few of the questions remaining in the paper. And in fact, we will not be able to discuss all the questions, but I am taking another 2 questions. Then altogether 4 questions will be discussed, and there will be 2 more questions which you can have the answer later. So let's come to the third question, which has the partnership question, and the latter part of that has error correction part. So question number 3, and if you find any difference in my paper, between my paper and your paper, please make your paper based on my figures. But I'm sure that you have got the correct paper, but I noticed that a different version had been distributed again. Now it is okay, right? So I think that you have the latest paper, right? Okay, question number 3. Ruvini, Savini and Aruni. Ruvini, Savini and Aruni run a partnership business, and they agreed to the following terms: payment of 10% interest on capital, share profits or losses between Ruvini, Savini and Aruni in the ratio of 2:1 respectively, pay a monthly salary of 50,000 and 60,000 for Savini and Aruni respectively. Now that is their agreement. Now what has happened? Aruni resigned from the partnership business on 1st April 2020. So that is very important date. On 1st April 2020, at the beginning of the year, isn't it? At the beginning of the year, Ruvini and Savini decided to continue the business and agreed to the following terms. Now this is their new agreement. So what are the conditions available in this new agreement? Pay 12% interest on the capital balance, payment of 5% interest on the beginning current account balances, share profits or losses between Ruvini and Savini in the ratio of 3:1 respectively, pay a monthly salary of 60,000 and 80,000 for Ruvini and Savini respectively. So that is their new agreement. Then it says the goodwill of the business was valued at 1,800 on 1st April 2020, and the goodwill should be recorded through the capital accounts. When Aruni left, she was paid rupees 500 to settle a portion of the equity, and no other entries were made with respect to the resignation of Aruni other than recording the amounts paid into her capital account. Meaning, at the retirement of Aruni, the partnership business has paid 500,000 cash. So what they have done, they have credited the cash account and debited the capital account. So there is no error in that transaction. Cash credit, capital account debit. Now after debiting 500, the capital account balance of Aruni has been given. The statement of financial position as at 31st March 2021. Here we have property, plant and equipment, and you know that this is carrying amount because we are not given the accumulated depreciation separately. So this is the carrying amount. And under current asset, stationery stock, service income receivable, total asset, equity, capital accounts of 3 partners, and we know that this 600 has been taken after debiting the cash payment of 500. Therefore, no need to debit it once again. And current accounts, beginning balances as of 1st April 2020, Rovini, Savini and Aruni. Draft profit. What do you mean by draft profit? Draft means it is not the correct profit. So we have to correct the profit, right? Because we are given the draft profit. Non-current liabilities under that 12% loan from Savini obtained on 1st October 2020, and under current liabilities overdraft 230. Do you see any difference in your question and my screen? Question as per my screen? Any difference in figures? Yes or no? I just want to make sure that the same paper is being used. Okay, great. So no difference. Great. Okay, great. Thank you for the response. Right. So we have been given few adjustments to do. And after that, the requirements, the first requirement is a statement to correct the draft profit and profit or loss appropriation for the year ending 31st March 2021. Capital and current accounts of partners for the year and statement of financial position as at 31st March 2021. So let's do this question, and you can see that I am not reading the adjustments because you know that you have to compete with the time. So if you read all these adjustments, it will take time. And also I am pretty sure that once you read all the adjustments, you can't remember anything, right? So it is kind of a waste. Okay, so what I do is I just read the initial part of the question and the trial balance, and I did not read the adjustments. Rather, I'm going to prepare the structures, formats, then take adjustments one by one. Okay, that's my plan. Okay, so here we go. Question number 3. And my advice is based on my previous experience, particularly in the yesterday's seminar. Don't go to the examination with the preset mindset. What does that mean? Some students say, okay, partnership question will not be undertaken, and I am not going to do the non-for-profit organization question. Okay, don't go with such a mindset to the examination, right? You have to study everything in the syllabus before you go to the examination. Okay, just assume that, okay, you think that the partnership question will not be taken. Okay, and one of your favorite lessons is, say for example, say for example, error corrections. Okay, so favorite one is error correction. You don't like to the partnership. But if the question comes in this way, first part partnership, second part error correction, what happens? You will be confused. So such confusion should not happen at the examination. Got it? Therefore, don't go to the examination. I am again and again telling the same thing. Don't go to the examination with a preset mindset. Okay? Assume that, another example, assume that you don't like to the cash flow statement question. Okay, cash flow statement question. So you go to the examination with the preset mindset. Okay, this time if the cash flow statement question comes, I don't attempt. But assume that the coming examination has very simple cash flow statement question. But you had a preset mindset that I will not be taking the cash flow statement question. Because of that mindset, you can't attempt that easy question. Therefore, my dear students, don't go with the preset mindset. Okay, so that's why we are doing this partnership question and also the other questions. Okay, so I don't skip any questions. So I'm coming from the beginning. Company accounting, compulsory one. Management accounting, compulsory one. The third one. Got it? Right. So the requirement is first a statement to correct the profit. Statement to correct the profit. So we can have a statement like this, and on top of the statement we can write draft profit, that is the erroneous profit, draft profit, and we may have to add some adjustments and deduct some adjustments, then we get correct profit. Correct profit. Okay, and the profit and loss appropriation. So I keep this section for the profit and loss appropriation. Okay, profit and loss appropriation. And then I go for the partners, capital and current accounts. Okay, this is capital account, and we have 3 partners. And also current account. Current account. And 3 partners are, as per the question, 3 partners are Ruvini, Savini, Aruni. So let's take the first letter of each name. RSA. 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 Okay, right. And then we need the statement of financial position. Statement of financial position as at 31st March 2021. Right, under that non-current asset, then current asset. Under current asset, we have stationary stock. Stationary stock, you can just write like stock. And service income receivable, income receivable, and then keep like 2-3 rows, and then total asset. Total asset. And under equity, you know that in a partnership, equity consists of 2 parts. In a partnership, equity consists of 2 parts, capital accounts and current accounts. In a company, In the morning, we discussed in a company, equity consists of two parts: stated capital and reserves. Right? Stated capital and reserves. But in a partnership, equity consists of capital and current accounts. So capital accounts, and then current accounts, and then non-current liabilities and current liabilities. Okay. So when you get a partnership question like this, don't rush to write the answer. Spend like 1.5 minutes to plan the question. Planning is essential. So let's plan it. Now you know that our financial year ends on 31st March 2021 and it starts on 1st April 2020. And we have had three partners. Three partners are RSA, and A retired when on this date. Now A retired at the beginning of the year. Therefore, to prepare the financial statement of this year, we require to use the new agreement. New agreement. Because change happened at the beginning of the year. Change happened at the beginning of the year. Got it? Right. Right. So we can put the beginning balances. And if I go back to the capital accounts, balances given, balance brought forward are 1,800, S 1,500, and A 600. Now look at this 600. It has been taken after paying 500 in cash. It has been recorded. Okay, so no need to record it once again. And also the current accounts, beginning balances, balance brought forward 80, 140, and Aruni has a debit balance of how much? 40. And where do we start? So we are going to start from the point that you start. Yeah, I know that, but at the examination you have to decide it on your own. Okay, right. So I am going to start from the adjustment number 1. Right? So what is the adjustment number 1? First one. Drawings made by Ruvini and Savini in the year ended 31st March 2021 are 400 and 450 respectively. These are the drawings made by two partners, remaining partners. The drawings were recorded as expense of the business. So that is incorrect. That is wrong. Right? Drawings are not expenses, rather they are distributions. Reduction of equity. Right? So what they have done, they have taken these drawings as expenses. So we have to correct it. Expenses credit, current accounts debit. So current accounts debit, write down quickly. Drawings, how much? 400 and 450. She is no longer there because at the beginning she resigned. Therefore 400 and 450. Expense credit means expense reduces. Therefore profit increases. So let's take the draft profit as well. Draft profit is 3,420. Expense decrease because of that profit increase. Drawings altogether 400 and 450, 850. So that is the first adjustment. Done it? Right. So we go to the next one. Second one. The business runs in a building rented from the Aruni. Now, Aruni was a partner, but with effect from 1st April 2020, she is no longer a partner. Now, the business is run in a building rented from Aruni. Monthly building rent is 40, and it says monthly building rent has been increased by 10% after 31st December 2020. These rental payments have not been made, meaning the rentals have not been paid, and rent expense has not been recognized for the year ending 31st March 2021. So let's calculate the rent. Let's calculate the rent. Right. Again, I am referring to the financial year. Now, what has happened with effect from, if I write it once again, with effect from 31st December 2020, monthly rent has been increased by 10%, isn't it? Monthly rent has been increased by 10%. So earlier, if I write the number of months from 1st April 2020 to 31st December 2020, 9 months. From 31st December 2020 to 31st March 2021, 3 months. Right? Before this date, monthly rent was 40. 40 multiplied by 9, 360. And plus, after 31st December 2020, monthly rent will be increased by 10%. Increased by 10%. So 10% of 40 is 4. 4 plus 40, 44. 44 multiplied by 3. 132. Am I correct? I'm not sure about my calculation, right? 44 multiplied by year. So total rent expense is 132 plus 360. It's 492. 492. Now this has not been accounted or paid. Accounted or paid. Not accounted and also not paid. So we can account 492. 492. 492. So it is an expense, therefore rent 492 should be reduced, should be deducted from the draft profit, right? And then statement of financial position under current liabilities, rent payable. Rent payable. Now remember 492, remember Aruni is no longer a partner. Aruni is no longer a partner. Therefore, whatever payable to Aruni should be recorded as a separate liability. Got it? Separate liability. But if it is payable to an existing partner, we can credit to the current account. We can credit to the current account. But Aruni is no longer a partner. Right. Then, third adjustment. Property, plant and equipment should be depreciated for the year ended 31st March 2021. Should be depreciated. Meaning, current year depreciation expense has not been recorded. Property, plant and equipment should be depreciated for the year ended 31st March 2021. The cost of the land included in the above property, plant and equipment is 2,500. So we did the same adjustment in the company accounting. Cost of the land included in the above PPE is 2,500. All remaining assets consist of depreciating asset. Now except land, all assets are depreciable assets. Right? And accumulated depreciation as at 31st March 2020, again at the end of the last year, is 800. Property, plant and equipment are depreciated at 10% on cost using straight line method, and no purchase or removal of PPE has taken place in the year ending 31st March 2021. So this is pretty much similar to the adjustment that we did in the company accounting. Okay, company accounting. So we will take it. Now, as per the trial balance, PPE as per the trial balance PPE is stated that 6,500. What is this? Carrying amount. Now we know this. 6,500 is the carrying amount, right? And this includes land costing 2,500. So you know that lands are not depreciated. Therefore, I deduct 2,500 from here. Same adjustment we did in the morning when we did the company accounting question. So the remaining is carrying amount of other asset. Carrying amount of other asset. That is 4,500. And this is carrying amount. And if we add accumulated depreciation at the beginning, that is given as 800, then we can find the cost, 5,300. Yes. That's why I told you I am very bad at calculations now, particularly today. There is the eraser. 6,500 minus 2,500, and even a baby can understand. Yes, 4,000. Right? 4,000 plus 800, 4,800. Yes, thank you. Now, this is the cost of the depreciable asset. On that, 10% should be depreciated. Very simple. 480. 480. Got it? Right. So, very simple, right? So, the current year depreciation is 480. It has not been recorded. So, we need to record it. 480. So, here we go to the statement to correct the profit. Depreciation 480 is deducted, and come to the SOFP. Under that PPE, you don't need to show the categories or rather asset classes, because in company accounting you have to maintain the requirements as per the SLFRS, I mean accounting standards. But when it comes to sole proprietorships, partnership business, non-for-profit organizations, there is no such requirement. Therefore, you don't need to categorize PPE. You can have PPE as a single point or single item. So the earlier value is 6,500 carrying amount. Now we depreciated 480. Therefore, carrying amount, new carrying amount is 6,020. Am I correct? 6,020. But we did that analysis in order to find the cost, right? So you don't need to mention land separately, depreciable assets separately. No need. Got it? No need. So again, when you manage your time, these instructions are important, right? These instructions are important. Okay, so done. The next one. Accrued electricity and telephone as at 31st March 2021 is 14. No adjustments were made for the accrued electricity and telephone. Very simple. So under current liability, accrued electricity, that is 14. Look here. Look at here. Now I did not write telephone and other expenses. Accrued electricity and telephone. I just wrote accrued electricity. That's enough. If you miss one word, we don't cut marks. But if you write that word, it will take at least 1-2 seconds. Therefore, you have to manage your time, thinking strategically, right? Accrued electricity, and even you can short these words further, right? So 14, and it should be deducted from the profit. Accrued, let's say accrued electricity. Got it? Right. What next? Fifth one. A check of 410 was received from a customer on 30th January 2021 for the service income receivable, and this check has been accounted for as a receipt by the business on 2nd April 2021. There is a little mismatch of the dates, but there is no technical error in the question, right? But it is better if it is 30th March. If it is 30th March, it is practical, right? But don't worry, there is no technical error in the question, right? The date is correct, but it is better if it is 30th March, because we don't keep like 2 months to deposit the check. We don't keep like 2 months to deposit the check, right? Therefore, to make it practical, if it is 30th March, that would be a better adjustment, right? Okay, anyway, so we will keep the date as it is, don't worry. A check of 410 was received from a customer on 30th January 2021. But it has been accounted for on the date which was deposited, that happened on 2nd April 2021. This check has been accounted for as a receipt by the business on 2nd April 2021 on the date on which the check was deposited in the bank. Now, my dear students, tell me, as you think, when should the business record this check? When should the business record this check? Is it on 30th January or 2nd of April, as you think? Yes, you can respond. When should the business record this? Is it on the date of receipt the check, or is it on the date of deposit? Yes, all of your answers are correct. I am happy because you are on the track and you will get a very good mark at the examination, and I might see some of the faces. Now I can't see, but in time to come, I might see some of the faces in our university, right? Okay. All of your answers are correct. Now, we received the check from the customer on 30th January or 30th March. Let's say 30th January. We received, right? But we deposited in another day. We have to record the check on the receipt, not on the deposit, because customer paid us, right? So we have to record it on 30th January. But what has happened? They have recorded, in this case, they have recorded it on 2nd of April, after the reporting period. After the reporting period. But it should have been recorded on the receipt, that is on 30th January. So what we need to do, now this balance is available in the receivable balance. Receivable balance, right? So you come to the statement of financial position. Under that, income receivable, as per the SOFP given, service income receivable 1,520 as at 31st March 2021, right? But of that, 410 has been paid, but it has been accounted in the next year. But it was paid on 30th January, that is within the year. Therefore, we have recorded. Therefore, minus 410, because debtors paid us, right? Debtors paid us 410. Therefore, receivable minus, I mean debtors account credit and cash account debit. Cash account debit. And if you look at, we have been given an overdraft. We have been given an overdraft. Overdraft is given OD. I mean cash balance is given as an OD, right? So you can prepare a small account if you want. Cash account, it is an OD balance 230 balance brought forward. Now we had received 410, but we haven't recorded it. Now if we record it, debtors credit, cash debit 410, right? Debtors credit, cash debit 410. Then what happens? This OD becomes a favorable balance. Debit side 410, 410 minus 230. What is the figure? 0, 8, 1. 180. If my calculation is incorrect, please correct me. 180 cash favorable balance. Earlier an OD balance, now this is a favorable balance. So under current asset, cash 180. Cash 180. Got it? 180. Right. So we have done that adjustment as well. Next one. The interest for the loan obtained from Savini have been paid and accounted for months other than March 2021. Other than March 2021. Other than March 2021. For other months other than March, they have paid and accounted it correctly. So let's look at. Now you can see under non-current liabilities, 12% loan from Savini obtained on 1st October 2020, 400. So let's calculate the interest. Loan Savini. Now it has been obtained on 1st October 2020. You know that in a tax year, like starting from 1st April 2020, ends on 31st March 2021. 1st October means exactly middle. Exactly middle. Therefore, 6 months. Right? Now, the business has paid and accounted the interest except the last month. Except the last month. So we can calculate the interest of the last month. Right? Last month. How? Loan value is 400, interest rate is 12% annually, but only last month, March, we need to account 12 upon 1. 12 and 12 we can cut, and it is 4. So 4 needs to be accounted. 4 needs to be accounted. Except March, other months have been paid and accounted correctly. So 4. 4 as an expense, deduct for interest Savini, and it is payable to Savini. Payable to Savini means Savini is a partner. So anything payable to a partner is credited to the current account. So current account of Savini credit for interest payable. Interest payable. Got it? Now, rent payable to who is the partner, retiring partner? Aruni. Aruni, current liability because she is no longer a partner, but Savini is still a partner, therefore current account credit. Got it? The last one. Last one. Partners' salaries are not paid during the year. Very simple. Partner salaries are not paid during the year. So adjustments are done. So let's get into the first part. Right. Now this is a retirement. At the date of retirement, goodwill of the business was valued at 1,800. So we can record it. 1,800. Very simple. You know that goodwill is credited to the capital accounts. Goodwill is credited to the capital account Goodwill capital accounts based on the old ratio. So 1,800 divided by the old ratio. Can you remember? Old ratio 2:2:1. Altogether 5. Altogether 5. Right? 1,800 divided by 5. One share 360. Therefore, this is 360 and double of that 720 and 720. And goodwill is written off based on the new ratio. Goodwill 1,800 divided by new ratio. New ratio is 3:1, 4. 1,800 divided by 4, one share is 450. And Aruni is no longer there. Here 1 is 450 and 3 means 1,350. Am I correct? Yes, 1,350. Now the goodwill adjustment is done. And 500 has been paid to Aruni at the date of retirement and it has been accounted. So no need to account it once again. Right? And Aruni is retiring at the beginning of the period. Therefore, without appropriating or without distributing the current year profit, we can transfer the Aruni's current account balance. Aruni's current account balance to the capital account. So Aruni has a debit balance. We can transfer that. Transfer that balance to capital accounts. Capital accounts Aruni. Capital accounts Aruni. So current account credit, capital account debit 40 coming from the current account Aruni. Coming from the current account Aruni. Okay. Now we can balance the capital account of retiring partner. Credit balance is 960. 960 minus 40. It is 920. We have to pay it. But it does not say that this balance part of equity is paid. So we have to transfer it to loan account. So 920 is transferred to loan account Aruni. So in the SOFP under non-current liabilities, we did not mention the Savini's loan as well. Savini loan, it was 400, and in addition to the Aruni loan, 920. Yes, Anuti, 500 was paid. 500 was paid and accounted correctly. Right? Therefore, when you take this 600, right, that 500 has been considered. No need to deduct it once again. Got it? 500 is paid and it has been accounted. Therefore, Aruni's capital account balance prior to this payment should be 1,100. Now, after paying 500, they have taken the balance as 600. Got it? Right. Hope that is understood, right? Now, this is a loan. And if you can remember, as per the section 42 of the partnership ordinance, right? If the equity of a retiring partner is not settled at the date of retirement, you have to pay 5% interest annually, as per the section 42, right? So on this 920, Aruni loan, 920, we have to pay 5% interest. How much? 10% means 92, half of that 46, isn't it? 46, based on the, as per the section 42. So it is an expense. Okay, it is an expense because this is the interest to be payable to the Aruni. So we will record it 46. 46 interest. Interest Aruni. And it is payable to Aruni. Payable. Right? Write down expense 46 interest to Aruni and it is payable. Therefore, statement of financial position under current liabilities, interest payable to Aruni 46. Interest payable to Aruni 46. Interest payable to Aruni 46. Got it? Interest payable to Aruni 46. Done. Now, the question is over. Right? So let's look at whether some missing items are there. Missing items are there. Yeah, I can show the workings. And others, please write the other items in the SOFP. Other items like stationery stock. Yeah, only that. Only that. Stationery stock. Right. So we have stationery stock. Stationery stock 110. 110. Right. So we have done the question. So what is the next step is to distribute the profit. Distribute the profit. So we get the correct profit. 850 should be added and deduct these expenses quickly. 492, 480, 14, 446. 1036 should be deducted. Therefore, correct profit is 3420 plus 850 minus 1036. The correct profit is 3234. So that comes here to the appropriation account, net profit 3234. 3234. Got it? So now we want to, based on the new agreement, to distribute the profit. So the first one is, as per the new agreement, I don't show it once again, 12% interest on the capital balances. Interest on capital. Interest on capital. Right? Now, Aruni retired at the beginning of the year. Therefore, we pay interest to the remaining partners, Ruvini and Savini. Ruvini and Savini. So we have to balance the capital accounts. We have to balance the capital accounts because these goodwill adjustments are made at the date of the retirement that happened on 1st April 2020, the beginning date. Therefore, we have to get the adjusted balance. Quickly, we will take here 2520, 2520 minus 1350. The balance is 1170 carried down balance. And here Savini, it is 2220. 2220. Okay. 2220 minus 450, it's 1770. And here Aruni has no balance. 1170 and 1770. We can take these balances to the equity as well. Capital accounts, Ruvini and Savini, 1170, 1770. And on these balances, we can calculate the interest. 1170 into 12%. 1770 into 12%. Quickly we will take 1170 into 12%, it is 140.4. 1770 into 12%, 212.4. The summation is 8, 2, 5, 3 minus. Am I correct? Yes. Right. So these interest should be credited to the current accounts. Interest on capital. Interest on capital. It's 140.4, then 212.4. The next one is payment of 5% interest on the beginning balances of current account. Beginning balances of current accounts. Now, beginning balances of current accounts. Now, R and S. Now, for Aruni, we don't pay because Aruni retired at the beginning. Therefore, when we distribute the current year profit, we don't give interest on current account balances to Aruni because Aruni retired at the beginning, right? So, beginning current account balances 80 and 140 of R and S. So, interest on current account balances. Interest on current account balances, right? Again, minus interest on current account balances, R and S. The balances are 80 and 140. That into 5%. Here also 5%. Here 4. Here 7. Altogether 11. 11. Right? Again, current accounts credit. Current accounts credit. Interest on capital. Interest on current accounts 4 and 7. 4 and 7. Then we can take salaries. Salaries. Now, as per the new agreement, monthly salary R and S 60 and 80 per month. That into 12 months. So here 720. Here 80 into 12, 960. Altogether 80, 1,600. Am I correct? Quickly. Yes, 1,680. So current accounts credit, salaries 720, 960, and no for Arun. And then lastly, profit shares. Profit shares. Profit shares. So we can take the remaining profit 3,234 minus 352.8 minus 11 minus 1,680. It is 1,190.2. Am I correct? Please check my answer, particularly those who are doing the question with me. Correct, right? So profit shares R and S, the ratio is 3:1. 3:1. We can divide this by 4. One part is 297.55, and that multiplied by 3, we get 892.65. Am I correct? Right. So transfer these amounts to the current accounts and then balance, then complete the SOFP. 890, 892.65, 297.55. Current accounts profits 892.65 to 97.55. That's all. So let me balance it quickly. R 80, 140.4, 4, 720, 892.65. It's 1,837.05. 1,837.05 minus 400, 1,400 37.05. Carried down. Please check my answers. Here 144, 212.4, 7, 960, 297.55. 1620.95, 1620.95 minus 450, it's 1170.95. Can anyone confirm? Can anyone confirm my answers? Yes, very good, thank you. And here R and S, last part, 1137.05, 1170.95. So we can balance. Income receivable 1520 minus 410, it is 1110 plus 110 plus 180, 1400 total current asset. Therefore 7420 total asset. Total equity 1170 plus 1770, capital accounts 2940, current accounts 1437.05, 1170.95, it's 2680, sorry 8, here 1320, and current liabilities 492, 14 and 46, 552. What happens? 2940, 2680, sorry 8, 1320. Yes, 7420 it balances. All right, okay, I will go to the other page and please complete. Not this name. Yeah. Okay, so we go to the next question, next part of the question. Right. It is on the error correction. It is on the error correction. Right. Following errors have been occurred in the accounting records of Randil business during the year ended 31st March 2021. So we have been given 5 errors. The requirements are journal entries to correct the above errors during the year ended 31st March 2021 and balance in the suspense account prior to correcting the above errors. So if we answer for the first question, automatically the answer for the second question can be taken. So I'm taking the first one. Taking the first one. So you know that when you write the correction entries, we have to write it on the general journal. General journal. Therefore, write down general journal. Right, first error. The total of 845 from the sales journal has been debited to the creditors control account and credited to the sales account as 854. Look at that. The original value is 844, but it has been recorded as 854 to the creditors control account and sales account. Actually, there are two errors. There are two errors. Okay, there are two errors. Now the original transaction is now sales journal has credit sales. Sales journal has credit sales, right? So it is a credit sale. So if it is a credit sale, it should be recorded as the correct one, right? Correct one. How? If it is a credit sale, debtors control account debit 845 and sales account credit. This is the correct entry. But what they have done? They have debited the creditors control account. They have debited the creditors control account. But again, the figure is also incorrect. 854 and sales account credit 854. This is incorrect. This is also incorrect because the figure is different. Now, how to correct this? How to correct this? You know that the creditors control account is not applicable for a credit sale. Therefore, we can remove this. Creditors control account credit 854. One entry is 854 creditors control account credit. And if you don't understand this, later you can look at, right, with your prior notes as well as with the assistance of teachers. Right, and also you can see the sales account is overstated by the difference is 9 because it should be 845 but it is 854. So 9 overstated. So sales account debit 9. And then we have to create another account, debtors control account. Debtors control account debit the correct amount 845. Other entry. 845 debtors. Now this is the answer for the first one. And remember, if you are supposed to write the journal entries, you have to write the narration as well. If the narration is not required in the examination, it will say as it is. It will say that it is not required. Otherwise, you have to write it. Here also you have to write it, but I don't write because of the time limitation, but you have to write it, right? Second one. Second one. What is it? When a creditor's balance of 50,000 is settled, subject to a 5% discount, the full value, regardless of the discount, is entered into the purchase analysis column. Look at that, purchase analysis column in the payment journal. Now you have to have a proper or good understanding about the prime entry books. Otherwise, you don't understand this. Okay. Now again, I am writing the correct entry. What is this? Settlement of a creditor which has a balance of 50,000 and the 5% discount. Now the correct entry is when we settle the creditor's account debit 50 and cash credit, we got 5% discount, 50 into 5%, 2.5. Therefore, we need to pay only 47.5 and discount received is 2.5. This is the correct entry. So what they have done? They have done what? They have entered the total amount, 50, total amount in the purchase analysis column in the payment journal. Now in the payment journal, purchase analysis column is the cash purchases. Purchase analysis column is for the cash purchases. Can you remember? In the payment journal, the purchase analysis column is for the cash purchases. So how they have recorded cash credit 50 and purchase account debit 50. Purchase account debit 50. That is how they have recorded it. Remember, right? In the payment journal, if they have included that in the purchase column, so it is recorded as a cash purchase, right? The total amount. Now you can compare these two. Now it is not a purchase, so we have to remove this. This is error and even this is erroneous, right? So we can remove purchase. One entry, purchase credit 50. Purchase credit 50. And then cash account is overstated by 2.5. See, cash account should be credited only by 47.5, but it is credited by 50. Therefore, 2.5 should be removed. Cash account debit 2.5. Okay. And now these two accounts are okay, but creditors account should be debited. Look at this. Creditors account should be debited by 50. Now this is correct. And this is also correct. And discount received credited by 2.5. 2.5. Now this is the answer. Later on you can look at what has happened if you don't understand, because this is just error corrections you learned in the grade 12 class. Alternatively, you can write this entry together and this entry separately. Okay. Purchase account credit, creditors account debit 50, cash account debit 2.5, discount received credit 2.5. And you need to write the narration as well. Number 2. Number 3. Number 3. 6,000 petty cash expenses has been recorded in the other expenses analysis column in the cash payment journal and accounted accordingly. Now it is a petty cash expense, but it is recorded in the other expenses analysis column of the cash payment journal. So what has happened? What has happened? Third one. So original entry or correct entry is expense account debit 6, petty cash credit 6. How they have recorded? They have recorded in the cash payment journal and included in the other expenses analysis column. So expense account is debited. Because it is included in the other expenses. Expense account is debited 6. This is correct. But if it is recorded in the cash payment journal, the credit entry goes to the cash account. So this is incorrect. It should be recorded in the petty cash account. So the correction entry, third one, cash account debit 6, petty cash credit 6. Okay. Number 4. rupees 45,000 was paid to a supplier on 15th March 2021 for inventory to be purchased in April 2021. Now our financial year ends on 31st March 2021. Now 45,000 has been paid to a supplier on 15th March 2021 for inventory to be purchased in April 21 in the next year. So it is a advance payment. Advance payment. This has been recorded only in the cash account. Only in the cash account. Very simple. Right? Now if it is an advance payment, the correct entry is we paid an advance. We made an advance, right? So it is an asset. Advance account debit 45, cash account credit 45. What they have done? They have only recorded that in the cash account. Now this is correct. No any other entry, right? So I am taking these questions very speedily because the time is limited, right? If I take much of the time to discuss these questions, the number of questions to be discussed will be limited. And please let me know if you don't understand. I can slowly discuss, but the content will be very lower. Okay, that is the case. Okay, so if it is an advance payment, advance account debit, cash account credit, only cash account has been recorded, right? So this is correct. So the entry is, correction entry is advance account debit 45, suspense account credit. Suspense account credit 45. I hope that you understand these, right? Because you are at the 11th hour of the examination. So you have studied all the lessons, previous lessons. So you have the proper understanding and knowledge. Therefore, I hope that you understand these. Yes, you can say advance payment account. Yes, advance payment. Because if you make an advance payment, it is an asset. Advance payment account debit. We can't credit the cash account because it is already credited correctly. So suspense account credit. Last one. Last one. Prepaid actually. Okay, if you write like prepaid expenses, we might give marks at the examination, but it is not a prepaid expense because it is an advance payment to a supplier to purchase inventory in the next year. Okay, so it is not a prepaid expense, but if you write like prepaid expense, we might consider in giving marks. Okay, last one. The balance of the purchase return account is 18,500 and it is entered on the debit side of the trial balance. Debit side of the trial balance. The account is purchase return account. Right, you know that number 5, you know that purchase return has a credit balance. Now assume that we returned 18.5 to creditors. Therefore, the correct entry, the correct entry is creditors account debit 18.5 and return outward, isn't it? Return outward or purchase return credit 18.5. What has happened? When we prepare the trial balance, this is debit, this is credit. And we have taken this return outward or purchase return account into the debit side, 18.5. And you need to know the corresponding account should also be recorded in the same side. I think you can understand, right? Now what has happened? Return outward account has a credit balance, but it has been recorded in the debit side of the trial balance. So what happens? The difference will be the double, because original entry is there in the debit side. Therefore, difference is in the credit side. It's 37 as I remember, as I think, 37, right? So this difference is in the credit side of the suspense account. Now this goes to the suspense account. Okay. So to remove this, suspense account debit. 37. That's it. And remember, if you have an error in the trial balance, only a single entry is required to correct that error. So suspense account debit. And the last part of that, we need to find the suspense accounts balance. Right? Now you can see only 4 and 5 have the suspense account. So we can prepare a small suspense account and keep the first row, because we don't know from which side the balance will come. So we can record this. In the fourth one, suspense account credit 45. Okay, from the advanced account. And in the fifth one, suspense account debited 37. Trial balance. So now we can see the credit side is higher than the debit side. Therefore, the beginning balance, not beginning, the balance available in the suspense account prior to the corrections of errors is debit side. How much? 8. That is the answer. Any questions? Any questions? Right. So we come to the last question of the day. I'm going to discuss only one question, that is cash flow statement question, and remaining 2 questions can be discussed on your own with the assistance of your teachers. Where is the 9? We did not have the suspense account earlier. Sales account here. Sales account. Not the suspense account. Got it? Right. So we come to the last question of the day, that is cash flow statement. Right. Nilruwan PLC's statement of financial position as at 31st March 2021 and 31st March 2020 are as follows. We have been given non-current asset PPE at the carrying amount. Now you can understand. Investments, current assets, under that inventories, trade receivables, cash and cash equivalents. Equity, stated capital, retained earnings, revaluation reserve. Non-current liabilities, bank loans, and current liabilities, trade payables, interest payables, taxes payables, overdraft. We have been given additional information. In the PDF, cash flow sum is missing. Maybe in the first part, because we sent you the paper in 2 parts. One in the first, one in the morning, and 2 in the evening. So you need to take the second part, right? So I'm sure that will be available in the second part. Okay, so we have been given additional information. Right. And the requirements are, first one, the cash flow statement using the indirect method for the year ending 31st March 2021 and calculate the following ratios to an approximate value. Okay, so without taking much of the time, I will write the format. Write the company's name. I don't write it here. Company's name and the period, statement of cash flow. Statement of cash flows for the year ended, for the year ended 31st March 2021. So in the indirect method, you know that we start with the profit before tax and then we make adjustments and keep like 5 to 6 rows, and then we get operating profit. And then working capital changes. Keep like 4 to 5 rows, and then we get cash flows generated from operations. And then we deduct tax payment and interest payment. And then we get net cash generated from operations. And investment activities, the result is net cash generated from investment activities, and then finance activities, keep some rows. The result is net cash generated from finance activities. Then taking all these net cash flows, we get change in cash and cash equivalents during the period. Change in cash during the year. And we take the beginning balance first, cash and cash equivalents as at 1st April 2020, cash and cash equivalents as at 31st March 2021. That is the structure. Right. So let's start. First, we have to find the profit before tax. But here in this question, of course, I must mention that this question is a difficult question. But I see that you are a set of brilliant students and you will be lucky enough to come to our university. If you come to our university, I will be there at the Department of Accounting. In the Department of Accounting, you will be fortunate or unfortunate enough to learn once again from me if you come to the university. But I see that there is a potential in you because the last set of students, because we started like a higher number. It's natural in an online session. At last, it will be reducing, but whoever will be existed until last are very brilliant set of students, as I think. Okay, so first we have to find the profit before tax, and I told you this question is a difficult question, right? So we are not given the income statement, and if you are not given the income statement, you can't prepare the cash flow statement on direct method. Definitely we have to prepare the cash flow statement on indirect method, right? So let's come to the workings, and let's read it carefully. First one, lands and buildings were revalued for the first time in the year ended 31st March 2021, and the revaluation surplus and deficit, look at that, revaluation surplus and deficit from lands and buildings were 800 and 450 respectively. So we will prepare a PPE account. Property, plant and equipment. Keep some more rows, right? And write the beginning balance of PPE. 6,200. Okay, and don't put the closing balance. I will tell you the reason. Don't put the closing balance. Carried down balance, don't write. Okay, I told you this is a difficult question. Now let's take the first adjustment. Lands and buildings were revalued to the first time, and they have resulted surplus of 800 and 450 of deficit from lands and buildings respectively. Now if it is a surplus, asset account debit, can you remember? Surplus is debited to the asset. Therefore, debit 800 to the asset. Right? Now that is not a cash flow. It is a value increase, not a cash flow. So, now that is reflected in the revaluation reserve. Look at this. Revaluation reserve. You can put a tick for this. Now this is done. Now the increase in the revaluation reserve reflect or represent the revaluation surplus of land. It is not a cash flow. And it created a deficit of 450 from the buildings. If it is a deficit, reduction of value. 450 credit side, therefore 450 deficit. And if you know, and if you can remember, the first time deficit is charged to the P&L. First time deficit is charged to the P&L. Now this is included in the profit as an expense, but it is not a cash flow. Therefore, you have to add back. The deficit 450 under adjustments. Okay, under adjustments. Got it? Right. Now the first adjustment is done and revaluation surplus is also done. Next one. The dividend paid in the year ended 31st March 2021 was 110. Now it is a cash flow. Dividend paid. And the board of directors of the company has proposed a final dividend of 140 for the year. You know that proposed dividends are not accounted. Only the dividend payment, which is called as interim dividend, is recorded. Therefore, though you are given the proposed dividend, don't take that as an adjustment, because to confuse you, it is given. So ignore the proposed dividend, take the dividend payment only. So it is a financial activity, dividend paid. Dividend paid. 110 cash outflow, dividend paid. Now, I told you that in this question, we are not given the income statement. But anyway, we have to find the profit before tax. Now, to find the profit before tax, we have to take the change in the retained earnings. Change in the retained earnings that has happened during the year. So, we will come to the work in retained earnings. Retained earnings. Okay. The beginning balance. Balance as at 1st April 2020. Balance as at 1st April 2020. 2240. 2240. And we found one adjustment which requires to adjust to the retained earnings, that is dividend payment. Dividend paid 110 minus 110. Minus 110. Got it? The second adjustment is also done. So we come to the third one. Yes, third one. The income tax paid. Income tax paid, that is the payment by the company during the year ended 31st March 2021 was 355. Income tax paid. Right. So income tax payment is here. Income tax paid 355 minus. 355 minus. Right? 355 minus. And we need the profit before tax. Profit before tax. And if we find the profit after tax from the retained earnings, if we find the profit after tax from the retained earnings, we have to add back the tax expense to the profit to find the profit before tax. Therefore, the tax payment is known. From this, we can find the tax expense. Tax expense. And prepare a small account tax payable. Tax payable. The beginning balance is from the SOFP, you can take the beginning balance, tax payable 40. Tax payable 40. And closing balance is 75. Carried down from the debit side 75. And we have paid 355. Cash account credit, this account debit 355 cash. Now we can find what? The tax expense which goes to the P&L. 0, 3, 4. Am I correct? Yes. 430 minus 40, 390 tax expense. Tax expense. Got it? Because we need to add the tax expense to the profit to find the profit before tax. So we found the tax expense 390. Okay. Then we approach into the fourth adjustment. Fourth one. On 1st April 2020, a machine costing 2,000 and accumulated depreciation of 1,450 was sold for 420. Now this is a cash flow. Sold for 420. Right? So it is a cash flow. Write down under investment cash flow, sale of machine. Sale of machine. Sale of machine. 420 cash inflow. Sale of machine cash inflow. Got it? And we will prepare the disposal account as well to find the disposal profit or loss. So come to the PPE. Come to the PPE. Now you know that this is the carrying amount, right? This is the carrying amount. Carrying amount. And when the asset is disposed, prepare a disposal account. Disposal account. The item being disposed has a cost of 2,000. Cost is 2,000. Accumulated depreciation is 1,450. So we can find, or you can find, the carrying amount of the asset being sold, and it can be removed. Right? Disposal. Carrying amount 2,000 cost minus accumulated depreciation 1,450. So the carrying amount is 550. Am I correct? 550. If I am wrong, please let me know. PPE credit, disposal account debit 550 coming from the PPE. Coming from the PPE, right? So I removed the carrying amount of the asset being disposed because this is the carrying amount earlier. And it was disposed at 420 cash. 420 cash debit on one hand, disposal account credit 420. Now if you balance this account 550, and we get what? 31, 130 what? 130 what? Profit or loss? Profit or loss? It is a loss. Because this account credit, P&L debit, it is a loss. Now it is not a cash flow, only this is cash flow. It is included already, right? Now this is included in the profit as a reduction, as an expense. So we have to add back 130 loss on disposal of machine. Loss on disposal of machine 130 should be added back under the adjustments. Give me 1 second. Right. So it is done. Then it further says, company purchased a new machine on 31st December 2020 for a cost of 2,500. Again, the cash flow. New asset was purchased. Under investment activity, purchase a machine. Purchase a machine. 2,500 cash outflow. 2,500 cash outflow. And I will record it in the PPE, purchase debit 2,500 cash. 2,500 cash. Right, it is also done. Then it says the useful life and the residual value of the new machine was estimated at 709 years respectively. That is relevant for the new asset. But the new machine was not depreciated for the year ended 31st March 2021. Now this is the most difficult adjustment in this question. Now there is an error. There is an error. For the new asset, it has not been depreciated for the current year. Therefore, our retained earnings balance is incorrect, as well as the PPE closing balance is also incorrect. Therefore, my dear students, if you have any errors, first of all, you have to correct these errors prior to prepare the cash flow statement. So let's correct this error, then take the correct balances, and based on the correct balances, we can prepare the statement of cash flows. Right. So what has happened? This new purchase, write down a timeline like this. The financial year starts on 1st April 2020, ends on 31st March 2021. Okay, this is our financial year. The new asset was purchased somewhere here, 31st December 2020. And you know that from this date to this date, only 3 months. 3 months. Only 3 months. And only for these 3 months, it has not been depreciated. So let's find the depreciation. Depreciation. The cost is 2,500. And its residual value is given as 700 minus 700, and useful life is 9 years. Therefore, 2,500 minus 700, 1,800 depreciable value divided by 9. Therefore, annual depreciation is 200. But we don't need to depreciate for the entire year because we purchased on this date. So only for 3 months. Therefore, 12 upon 3, that is 1/4. It is therefore 50. 50 to be recorded further. 50 to be recorded further. Now this is an error. Depreciation of 50 has not been recorded. Now when we record this 50 depreciation, what happens? The retained earnings closing balance. Right? Retained earnings closing balance, what will happen? Decrease. 31st March 2021 balance will be decreased. Write down. The balance given is 3,790 and will be decreased further by 50. Therefore, correct retained earnings balance is 3,740. Because depreciation is an expense, because of that retained earnings comes down. On the other hand, PPE closing balance will also be decreased. 7,880 minus 50 minus 50, it is 7,830. So what we did is we corrected the balances. Very simple. Now it is simple. Okay, now it is simple. Got it? Right. Now what happens? Right. So let's find the other things. Now there are no other items relating to the retained earnings changes. So the remaining change would be the profit. Remaining change would be the profit. So quickly take the difference. What you can do is when you go from the bottom to up, you can add minus items and deduct plus items. 3,740 plus 110 minus 2,240, it's 1,610 net profit. Am I correct? 2,240 minus 110. Yes. So this is profit after tax. And we need the profit before tax. To find the profit before tax, add the tax expense to the profit after tax, then you can get the profit before tax. This and this add together. 1,610 1610 plus tax expense 390. Therefore, it is 2000. Hope my calculation is correct. 2000. Now we found the profit before tax 2000. Very simple. Right. Then actually, if you look at other adjustments, there is no connections to the PPE or any other items, particularly PPE items. Therefore, what we can do, hope we entered all the items: beginning balance, ending balance, deficit, surplus, new purchase, disposal, right? So if we balance this account, the debit side is 7,000, 9,500, 9,500 minus 450 minus 550 minus 7,830. What is this difference? What is this difference? Can anyone tell what is this difference? Yes, exactly correct. Exactly correct. Depreciation. It is the depreciation. So you are talented. You are good. So now we know the depreciation expense is 670. That is a non-cash item. So should be added 670 to the adjustments. Depreciation. Depreciation. 670. Okay. Added to the adjustments. Right. Then next couple of adjustments. Fifth one. A bank loan of 1,000 has been obtained. Another cash flow during the year ended 31st March 2021, and the loans have been repaid during the year. Right. So bank loan has been taken. It is a financial activity. Loans obtained. Loans obtained 1,000. Loans obtained 1,000. And also they have paid, they have repaid the loans. How do we find it? How do we find it? Now, if you, let me use this space. If you come to the SOFP, the beginning bank loans was 2,000. First April 2020, 2,000 balance. And we obtained 1,000 further. And it should be 3,000. But at last, we have how much? We have 1,895. Then repayment, or we can say paid, can be found. Simple logic, right? Beginning balance 2,000, we obtain 1,000, therefore it should be 3,000, but at last it is 1,895. Therefore the difference is the repayment. It is 1,105. 1,105. So it is a payment, repayment. Again, a finance activity, 1,105 loan repayment, or we can simply say loan paid. Loan paid, cash outflow. This is a cash inflow. This is a cash outflow. What else? Sixth one, interest expense and the interest income for the year ended 31st March 2021 were 460 and 42 respectively. Interest expense and interest income. Right? So both should be adjusted here. Interest expense. Interest expense. Now originally it is deducted from the profit, so we have to add back 460. Add 460. And interest income, is originally added to the profit. Therefore, to remove it, deduct 42. Because interest income is not an operating activity. Interest income is an investment activity. Therefore, include that here, interest receipt. Interest receipt 42. Interest receipt 42. I think that you understand this because I am not teaching the theory. I am doing the paper, right? So using this interest expense, we can find the interest payment. We can find the interest payment, right? So we can prepare a small account. Let me go to another page. Interest payable. Interest payable. So let's put the beginning balances. Interest payable beginning balance is 52. Brought forward balance. And carried down balance is 63. And expense that goes to the P&L 460. Therefore, credit side is 2,1,512 minus 63. The payment can be found. How much? 449. Yes. So that is the interest paid. Interest paid 449. 449. Interest paid. Interest paid 449. That is also done, right? The last adjustment, because the last two adjustments are given to calculate ratios. Number of shares issued by the company on 31st by 31st March 2020, 140,000. Sales for the year ended 31st March 2021, 8,000. These two information are given to calculate ratios. Therefore, only one adjustment is required or is left for the cash flow statement. That is very simple. The company has made a public issue of 110,000 shares at a 1.2 million consideration on 1st April 2020. So it is a share issue, public issue. We get cash. And if you look at the SOFP, the difference between stated capital, opening and closing balances, exactly 1,200. So that matches to the consideration. That matches to the considerations, right? So it is a share issue, public issue. Finance activity, public issue. Public issue. Public issue. 1,200 cash inflow. 1,200 cash inflow. When you make a public issue, you get cash, right? 1,200. So that's it. So let's come to the SOFP and we'll see whether we have taken all the items. PPE taken, investment, no. Earlier 0, now 175, meaning we have made investment 175 during the year. So it is a cash outflow, investment. Investment cash outflow 175 because beginning no balance, end of the period 175, meaning we have made an investment of 175. So it is a cash outflow. Then current asset, under that inventories that come to the working capital changes, inventories. First you take the change. Change is 1,144 minus 952, it's 192. Asset increase, therefore cash outflow. Then trade receivables. The change is 1,676 minus 1,524, 152. Again asset increase, therefore cash outflow. And we don't take the cash and cash equivalents to the working capital, right? Rather, it should be taken to the end. cash and cash equivalents at the beginning. At the beginning, cash balance is 154. 154. 154. But if you look at the ending balance, that is very important. Ending balance. Look at the ending balance. Yes, beginning balance is 154. That is okay. Beginning balance, no, ending balance 40. At the same time, you look at there is an overdraft. Overdraft. No overdraft at the beginning, but end you have 192. Therefore, when you take the cash and cash equivalents at the end, right? So OD balance is 192. So that is a minus balance, isn't it? Minus balance. And favorable balance is just 40. Therefore, the net balance is 152 minus. 152 minus. Therefore, ending cash and cash equivalents 152 minus. 152 minus. Got it? Right, 152 minus. Then we come to the equity. All are done actually. Stated capital done. Retained earnings, we took it to find the profit before tax. Revaluation reserve taken. Bank loan taken. Trade payables. And these two taken. Trade payables, take that to the working capital changes. Trade payables. The difference is trade payables 2698 minus 1100. Its difference is 1598. Liability decrease, cash outflow. Liability decrease, cash outflow. So that's it. So we can balance quickly. 450, 130, 630, 70, 460 minus 42, it's 1668 plus. Therefore, operating profit is 3668. Working capital adjustments all are minus 192, 152, 1598. It is 1942 minus. Therefore, cash generated from operations 3668 minus 1942. It is 1726. Tax and interest paid 355,449, 804. $804. 1726 minus 804, it is 922 net cash flows from operations. Then investment activities 420 plus minus 2500 plus 42 minus 175, it's 2213 minus. So it is not generated, it is used. Financing minus 110 plus 1000 minus 1105 plus 1200, it is 985. Plus. Then we can take the change here. How much? $922 minus 2213 plus 985. It is 306 minus 306 minus 306 plus 154. It is 152 minus. That is correct. That is the answer. Got it? So I'm going to calculate the 8 ratios within 10 minutes, and that will be the end of the seminar. So we need to calculate 8 ratios. Right. Okay. The first ratio is NP margin, net profit margin. Net profit margin, very simple, net profit divided by sales multiplied by 100. And we corrected the net profit, that is, as I remember, 1610. 1610 divided by sales are given at the end of the question, 8000. Sales 8000, that into 100. 1610 divided by 8000 multiplied by 100, it is 20.125%. And the second ratio is current asset ratio. Second one is current asset ratio. Current asset ratio. Very simple, current asset divided by current liabilities. So I'm taking the asset and liabilities quickly. Current asset 1144 plus 1676 plus 40, 2860. If I am wrong, please let me know. Divided by current liabilities 1163, 75, 192, 1430. Hope my answers are correct, right? 2860 divided by 1430, it's exactly 2 times. Number 3, quick asset ratio. Quick asset ratio. Very simple, current asset minus inventories, isn't it? Divided by current liabilities. Current asset is known, 2860. We can deduct the inventories, that is 1144, divided by current liabilities 1430. 2860 minus 1144 divided by 1430, it's exactly 1.2 times. Fourth one, debt ratio. Debt ratio. Debt ratio, long-term debt divided by equity. Equity. Debt value at the end of the period 1895. 1895. And take the equity, right? Equity, stated capital 3000. Retained earnings, take the correct figure 3740, isn't it? Correct figure. Retained earnings, correct figure, yeah, here 3740, correct figure. Then revaluation reserve 800 multiplied by 100. How much? 1895 divided by 3000 plus 3740 plus 800. It's approximately 25%. 25%. Wait for a while. It is debt ratio. Yeah, correct. Debt ratio, not debt to equity ratio, right? So here, debt plus equity, correct. Debt plus equity, right? Total capital, because it is not debt to equity, debt ratio. So we have to add another 1895 here. The answer is wrong. Very good. Answer is wrong. Okay, got it. 1895 divided by 3000 plus 3740 plus 800 plus 1895. It's approximately 20%. Am I correct? Approximately 20%. Yes. Yeah, okay, thank you. And fifth one, what is the ratio? Interest cover. So it is profit before interest and tax divided by interest expense. Now profit before tax is 2000. We know that interest expense is 460 divided by 460. 2460 divided by 460, it's 5.3. Sixth one, earnings per share, EPS. Net profit divided by number of shares. Number of shares. Net profit, correct one is 1610 and divided by number of shares. And you are given the number of shares as at 31st March 2020, end of the last year. As per the question, end of the last year, number of shares issued was 140,000. And on 1st April 2020, we made a public issue of 110,000 shares. So as at 31st March 2021, we have altogether 250,000 number of shares. So in thousands, 250. Right? In thousands, 250. Therefore, 1610 divided by 250, it's 6.44 earnings per share. Number 7, one before the last, dividend per share. And dividend paid 110, number of shares 250, 110 divided by 250, it is 0.44 dividend per share. Last one, debtors turnover. Debtors turnover. Credit sales divided by average what? Average debtors. And if we are not given the credit sales, we have to assume that all sales are on credit. Therefore, total sales 8,000. We have to take average debtors. Average debtors, trade receivables. At the beginning, 1,524. At the end, 1,676 divided by 2. 1,524, 1,676 divided by 2, 8,000 divided by 1,600, 5 times. Now these are the answers. Okay, so we have come to the end of the paper, not the end of the paper, end of the seminar, right? I don't know whether you understood this or not, because within a shorter period I can't teach everything. But what I did is I just did these questions. Hope that you are able to get some of the knowledge. And I see that the students who are at the last minute are very talented students or brilliant students, because they have the need to learn and they have a desire to achieve. They have a courage to employ. Therefore, you seem a set of brilliant students, right? So try to get the maximum result at your examination, coming examination, and try to come to our university, because you know that in management we are the best university. Therefore, try to come to our university, as well as after A-levels you can start the professional courses, such as the courses offered by courses offered by Achievers. So that's it. What should I tell more? Right. Okay, so let me Wish you all the best for your future endeavors and particularly for the coming examination. And you have like 2 months for the examination, and if you have gaps in certain areas, please try to fill the gaps in this period, as well as this period should be used to do papers. Okay, wish you all the best once again, and we might meet in future, sometimes we might not. Okay, right. So achievers, it's over to you to conclude the session.
Good evening, everyone. Thank you very much for participating today. It is such an honor for me to get the opportunity to thank you all on behalf of Achievers, the largest college for ACCA and CIMA. I would like to express my gratitude to Mr. Chaturanga Sandarwan, Senior Lecturer of the Department of Accounting, University of Sri Jayawardhanapura. And also I extend my gratitude to principals of respective schools, teachers for coordinating you all for this event. And it made this event a successful event. And I wish you good luck for your advanced levels examinations. And I think you will make that superb decision of joining with the Achievers to decide on your future career goal. And you will join us to do CIMA or ACCA, even for foreign studies. I must thank the management of Achievers, the organizers, and the creators of the magazine, The Question Bank, which is a very useful magazine for those who are getting ready for your advanced levels examination. Finally, I wish you very good luck for your upcoming exam. And also I congratulate for those who got enrolled for our scholarship program. And I wish you all the very best in your future endeavors. Thank you very much. Good evening.